How high can rates go before it becomes almost self-limiting?
The policy rate is going to rest on a high plateau for a while. That's going to feed into longer-term yields.
We're still within that transition period where we could have a very interesting trend environment.
We had the biggest surge in inflation in 40 years, and while headline has come down, core is still sticky.
We're seeing some cracks in the consumer, but broadly speaking, we still are pretty upbeat.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
We've got a global slowdown live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market on the S&P 500 is just about negative here on the S&P, or rather positive by 0.5% on the S&P. TK, a downturn in the global economy, ex-US. The data out of Europe this morning, dreadful.
You see it across equities, bonds, currencies, commodities, John. I'm going to go to American oil, $78.79, well under $80 a barrel. And you know where I go, John. I go to Zurich. Remember that breakfast we had in Zurich? It was like $120 for a bagel. I go to Euro Swissy, and I got strong Swissy right now signaling that global slowdown.
The data on services, on manufacturing, we were hoping that manufacturing came up to services in Europe. Lisa, anything but. Services is coming down to manufacturing.
And coming down at the fastest pace when you take a look at Germany in particular, going back to the heart of the pandemic, May 2020, raising a question of, okay, is Europe separate? Is Europe tied to China? Is this sort of the bleed through of the China slowdown? Or is this where things are going elsewhere and Europe is just more interest rate sensitive and ahead of it?
Take Europe out of it, take China out of it. Things are pretty good going into Jackson Hole, Wyoming on Friday. Tom, for Chairman Powell. Raises the question now for a lot of people, what's the more interesting speech? Chairman Powell on Friday or President Lagarde?
Yeah, I agree with that. I think it's going to be interesting to see how she nuances it. She speaks after Chairman Powell. Hopefully we'll get more than 7 or 8 minutes out of Chairman Powell. The last time we did that, I mean, Lisa was, Lisa had to barely get back to her chair before we, could go live again. But I agree, Lagarde could be a really, really important moment. What I would mostly say is this is the confusion Jackson Hole. It's just a confused picture right now.
All of that coming up a little bit later on this week. Here's the price action for you on the S&P 500. Equity futures here positive by 0.5%. My attention in the FX market, the euro negative by a third of 1%. Jordan Rochester of Nomura this morning already publishing saying this could open the door to 105 on the euro, but far more focused on the potential for sterling to get down to 122 from 126.44 on my screen, Tom, right now.
DXY, the major currency blended pair, goes out to new recent highs, 103.87. John, round that up to 104. The Bloomberg Dollar Index, not so much. This is a big currency move here, less about EM.
In the bond market, yields a little bit lower. We're down by 6 basis points, Lisa. Your 10-year, 426.
They're finally buying, just on the margins. How long can they keep buying, though, when it comes to the bond market? This is what I'm watching today, and I think is actually the sleeper issue. 1 p.m., the U.S. is auctioning off $16 billion of 20-year bonds. Tom, I know that you often shrug off these auctions and say, what's the big deal? This time, incredibly important to gauge both international and domestic demand for longer-dated securities in the U.S., especially after the sell-off that we've seen, with yields rising to the highest levels going back more than a decade. After the Bell Nvidia earnings, can they meet the expectations that are very high? I mean, we're talking about a 200% gain so far this year. And at 9 p.m. is the first Republican primary debate in Milwaukee. There are 8 candidates, not former President Trump. Very curious to see DeSantis really in the front and focus. The pressure is on him to regain his spot as number 2. But I'm curious about some of the others as well, in particular, Senator Tim Scott.
Looking forward to that a little bit later on this evening. Joining us now this morning to kick things off is Virginie Masseneuve, the Global CIO of Equities Allianz Global Investors. Virginie, wonderful to catch up with you. Let's start with the data out of Europe. Is bad news just bad news?
Yes, we've had some PMI out of France and Germany that were weak, particularly because of services. And for Germany, it's actually the first time they shrink in 8 months. The UK also had weak data. So I think what we're seeing in Europe is the impact of tight monetary policy. The transmission has been much faster or more powerful than in the US, where we had less COVID support, if you want. And we certainly don't have the kind of packages that the US has, about $1.9 trillion.
You mentioned transmission. It's such a French word, Virginia. I remember Trichet talking so much about transmission. We're going to transmit out to Jackson Hole with Adam Posen of the Peterson Institute. His essay on China is definitive in the new Foreign Affairs. Are we going to transmit China slowdown and China deflation over to the West?
I think there's an element of that. I agree. I think Chinese weak pricing, and even if the GDP growth stays around 5%, which is still the central case scenario at this point, it is a weaker China that we've seen. And of course, Europe is more exposed to China than the US. So definitely part of the slowdown picture. And I would say generally a theme of divergence of the US versus the rest of the world.
How much can you then get any conviction about buying in Europe at a time where there are so many questions swirling and there is, as you said, the more direct transmission mechanism of monetary policy?
Well, I think, as always in equity market, there's a price for everything. So if we are at the beginning of what I call the summer blues or consolidation phase, you will see some companies that have strong exposure to some of the programs we talked about in the US, or some of the growth areas linked to technology, productivity, increased climate change, investment, et cetera, that will come back to more reasonable prices. So I think always it's where's your buying point and what's your time horizon. And so during that period, we'll continue to see some interesting opportunities, but you have to be very selective.
You have a pretty contrarian call, Virginia, when you look at China and you think that it's underowned and the consensus is too negative on an economy that keeps underperforming, getting less and less transparent, where Xi Jinping is clearly not emphasizing the economy in the way that he had in the past and his predecessors did. What makes you less bearish or even bullish on Chinese assets at a time when everybody else is piling out the door and trying to exit as quickly as they can?
Well, I think what was really interesting, and as you said, less bearish, right, is that it seems you have a capitulation. There's a consensus avoid on China, and you've seen the news today with the 11 billion leaving and selling the Chinese market. You have to remember that the domestic investor in Chinese A shares is the dominant investor in the country. So what's happened? You're nearly in a phase where bad news is good news. Why is that? The government has a target of 5% GDP growth. Until it gets to the point where it feels that growth is threatened, it's not going to put in place big packages at the time where it's trying to restructure the quality of its growth. It wants less debt. It wants more quality, more high-end, more AI, more technology, more infratech, more consumer. And here's the point. The consumer, it can spend if it wants. It has a lot of savings, but it's a question of confidence. And of course, then you're talking about the property sector. I think we will see in the second half of the year policy measures, maybe around Bedaihe, that's coming at the end of the month, but around supporting the property market, with the policy housing is for living and not for speculation, but in a soft way. It wants to stabilize the property market with its three-arrow policy, if you want. One city, one policy. Every city has much more flexibility. Second measure will be to activate the capital markets. We heard about stamp duties. We're talking about long-term evaluation of companies and funds to give confidence, if you want, or even better trading options. And the final area is solving the local government debt. The LGFV issues is real, but here again, there's a lot of things going on in the background with local government sweeping stocks, for example, selling stocks and reimbursing debts, etc. So a lot of things is happening, and what I think is right now, we are in such a negative mood for China that with valuations where they are, it's really worth a look.
Virginie, do you trust the data out of China?
I've looked at China for 37 years. I remember the times where, the first B shares were listed. Listen, the data is what it is. It is an emerging market economy. However, what I've seen over that time period is definitely more data and more precision. Now, in some cases, China gives more data than the Western world. If you look at the segment of unemployment for the 20-year-old, for example, I'm not sure we have that data for all the countries in the world, right? So it's definitely a learning path. There's a lot of data. Some of it is timely, some of it is less timely. So you have to take it for what it is, which is it's an emerging economy. It's the second largest economy in the world, but it's an emerging market economy.
Well, Virginia, then, to Ian Johnson's essay of this month on what Western companies should do, you have wonderful Pacific Rim perspective on this. Do you see investment by the West coming back to China, or is it over?
I think it's a really good question. So recently, China put in place a 24-point plan to welcome foreign investment. I think what we're going to see is a big wave of investment from areas like the Middle East, and you've seen that already happening either in stocks directly or in big projects such as technology, for example, and very selectively from other parts of the world. Europe certainly is sort of in between the US and Asia from that perspective. Will it be at the level of what we've seen before? Probably not, but China is entering this third phase of development that I call China Phase 3, with much more geopolitics, an economy that's maturing. Remember, an economy that has demographic challenges as well.
I mean, you remember when WHO came to Washington, and it was just like a huge, huge moment. Do you suggest, and this goes to Steve Roach's essay in the FT, I believe it was yesterday, do you believe that Beijing, that Mr. Xi, will blink?
I'm not sure. I think there's a lot of political discussions taking place in the background. I think there's a face savings exercise, and there's the background, and there's the working level. And I believe China is the second largest economy in the world. I think people will be surprised by the innovation that China delivers in terms of the stocks you can buy in the market over the next 5 years. And I think in a year where we have elections, in a year where you have a lot of noise, we have to look through this and look at the long term.
Virginie Massenov of Allianz Global Investors. Virginie, thank you for the update on China. This belief here that if the growth target is threatened, we'll get the stimulus. Tom, I think some people might just say GDP is just what they tell us GDP is over in China.
I'm in that camp. I mean, I think the trend is there, the vector you can look at. But when you say 5% China GDP, do we really know what that number is? My answer is I'm going to listen to China Beige Book.
Morgan Stanley think they won't get there. JP Morgan think they won't get there.
And it's a shift from 6 months ago. It's a shift from the beginning of the year.
They won't get there. So many houses now looking for a 4 handle, and the government's looking for something around 5.
Yeah, and we were looking at 6, I think, is where we were
hoping
at one
possibly,
point.
Potentially,
this is when the snow was deep at Jackson Hole. Ice was over.
China was going to reopen, and
China was going to reopen.
That's where the strength in a global economy would be.
The winds blew in from Idaho.
Is that right?
Down
is
the
that
Lewis
how this worked?
River.
We weren't there.
Yeah, we were there. Lisa was out snowshoeing there.
Bramo was there talking about China reopening. That was where the growth would be.
Can you see me on the paint?
Like
we're
what,
going out Thursday. We're going to be
1836?
out there a day early this year, which is great. Thanks to our team for that.
In Davos?
Can you see? No, in Jackson Hole.
Okay.
Can you see me on the Paintbrush Divide? 13-mile hike. It's pretty rough.
Is that what it's called?
Yeah, it's like the toughest hike out there. I think it says me.
A lot of elevation?
Yeah, I'm going to wear my lederhosen.
Nice.
You know,
Special.
Valerie,
You're going to sing on this hike?
You're wicking bow tie?
Yeah, I got to wear the bow tie. Yeah, I'm
Wicking.
told I have to.
Is this why you've been away?
Yeah, I've been training. Walk around Central Park, whole park.
Do you use that step machine?
No, I don't
Try
do
the
the
step
machines.
machine,
I just walk around the park.
Around the reservoir?
Yeah, I start where I am and I go down, and I don't go below 59th Street. I stay on this side of it.
I'm aware of that.
Come around.
I'm not sure how you get
down.
to work when you don't go below 59th Street.
When you come up the west side, I don't make it to 110.
Right, okay.
I make it to Strawberry Fields forever, and that's about. Then I have a strawberry daiquiri.
Oh, nice. Fit a drink in, Tom, on that hike. Anastasia Amoroso of iCapital joining us in the next hour. Looking forward to that. Your equity market on the S&P 500 positive here by 0.5%. There's a lift in the equity market in Europe. There's anything but. They've got a weak euro. 108.10 threatening to break 108 down to 107 potentially off the back of some dreadful economic data. The PMI soft, weak. Manufacturing wasn't great. Services now coming down to manufacturing. And Deutsche Bank this morning already out there making a call. The ECB is going to hit pause in September. That decision about a month away. Christine Lagarde, the ECB president, delivering a speech in Jackson Hole later this week. Live from New York City. Good morning.
The Fed just finished the fastest tightening campaign in over 40 years, and there's considerable uncertainty about when they're going to be able to ease the inflation, the uncertainty about the Fed, the resilience of the U.S. economy. That's left us in a very different place. I do think at some point you're going to start to see things break.
Russ Kostrick there of BlackRock on whether things are going to break in the face of what's developing in the bond market. Some major moves in the last couple of weeks. Yields we haven't seen since 2007 on a 10-year, Tom, a cycle high in the last week. Let's turn to the FX market and what's happening at the moment. In the FX market, a euro that's weaker off the back of dreadful data. PMIs on the services side, sub 50 in many places. 426.27 is where the 10-year yield is, Tom, down 6 basis points. A bit of risk aversion out there if you're looking at foreign exchange. Euro weaker, sterling weaker.
I'm going to be a broken record, John, but as you is led with a global slowdown that we have, you see it in the real yield. And at Jackson Hole, I'm going to be quoting this like crazy. 10-year U.S. real yield comes in. It's lower. It's not as inflation angst when it's up near 2%. 1.91%. That's a demonstrative move in the last day.
Was 2% earlier this week.
2%.
That was like the line in the sand for you, I know.
But for a lot of people, I think it's way above the line in the sand. The line in the sand was 1.7, 1.8. We exploded above that with convexity, with acceleration, and now we've come back a little bit. That's the news last
Are we sufficiently restrictive? Is the question.
Well, I'm going to go over to the Bloomberg Financial Conditions Index. It's 0.019. We are more restrictive than we were the last time the Yankees won.
9 games losing
9
streak.
games.
Longest since 82. Brutal.
Yeah, somebody called in. Thank you so much for your worry about Douglas Cass down in Florida. Mr. Cass is medicated.
I think Doug is alive and well.
He lives right down the street from Jim Palmer, which is like Goosebumps, the famous Baltimore Orioles pitcher. And I think Palmer had to go over and give him a hug. An Orioles IB, some hug and love. And,
the season over.
And all that for the Yankees.
Big time.
Other than Mr. Judge, I think everybody's at risk there. We'll leave the baseball to the experts. Right now, we're going to go to the gentleman from New Hampshire. Of course, on the drama that we will see in Milwaukee tonight. Greg Valliere joins us, Chief U.S. Policy Strategist, AGF. Greg, I'm going to cut to the chase. The stereotype is the polarity of the nation and maybe even the polarity of the party. Let's cut to the Wisconsin chase. Wisconsin was won by Biden by under 1 percentage point, 0.63%. Trump won it 4 years earlier by 0.77%. How does this debate fold into those X number, those 10 key states that make the difference in November of next year?
Well, this is the opening night, obviously. I'll get my espresso machine out. It's going to be a late night. I think it's time for some new faces. And I think maybe one of the stories tomorrow morning will be the emergence of Tim Scott, the African-American senator from South Carolina. Maybe this guy Ramaswamy. There's a couple of other people who might do well. It's the beginnings of a sign that the country will look at fresh faces.
Where is the debris of George Bush Sr., somebody who worked in office for decades and decades, centrist Republican? Is that Chris Christie, or am I confused?
Well, Chris Christie is a centrist, but he's also very pugnacious. He can brawl, and I think he will be the hitman to go after Donald Trump. I don't blame Trump for not showing up. I mean, he's ahead by 40 points in a lot of states, so he'd have nothing to gain and everything to lose by showing up. But he will be a subject. I would focus, Tom, on other issues that will be interesting tonight. Aid to Ukraine. What do we do about the budget deficit? There are issues where the party is divided.
And that's one reason why people actually want to hear the issues, which have gotten drowned out by some of the larger concepts. I do want to dig into that. But before we do, you said you want to see fresh faces. And a lot of people are looking for that at a time where Ron DeSantis is having to prove himself in a new way. What does he have to do to reclaim his spot as number 2 and get some growth in his campaign promise?
Well, no gaffes, Lisa. I think he can't afford another misstep. But to a certain extent, he has an advantage in that his expectations are low. I think people aren't expecting him to show much, so he might exceed those low expectations.
When you talk about some of the divisive issues, you mentioned aid to Ukraine. Where is sort of the popular feeling within the Republican Party? Is there consensus that some of these candidates are going to try to reflect? And is it different from the more general population consensus?
Good question. I think for the base in the party and some of these candidates, the feeling is we've spent enough on Ukraine for a war that hasn't been won. I think there's also a real division on Social Security and how you deal with a budget deficit. Chris Christie has been very outspoken saying we need Social Security reform. DeSantis said that a few years ago. Will he embrace that tonight? That I'm not so sure of.
Greg, for our international audience, and frankly, I'm not up to speed on this as well, what's the primary process look like? Is it radically different than what we grew up with? Is there something new this year as we stagger through February?
No, I don't think so. I mean, the signing deadlines come late fall. By Thanksgiving, a lot of states will have their deadlines, which will focus, I think, on the governor of Virginia. I think there's a chance that Glenn Youngkin, late in the sign-up period, will decide, if it's just Trump and nobody else looking strong, Glenn Youngkin's worth about $500 million, and I wouldn't put it out of the question him running at the last minute.
Who else has money? I mean, obviously, President Trump, even with the legal challenges, has money. Mr. Pence, I believe, is struggling. Which of the candidates tonight on the stage has money?
Well, not a lot of them have Glenn Youngkin money. Earlier in the year, DeSantis raised a decent amount of money, but the surprise fundraiser in the last few months has been Tim Scott. And again, I think Tim Scott is going to be the surprise of the night.
Greg Valliere, thank you, Greg. As always, looking ahead to that debate a little bit later over at AGF Investments. It's round one, Tom, of a brutal battle into 2024.
You can talk to Valliere about this because he's a New Hampshire boy, and I've been up there with him during the dash. And John, particularly for our international audience, there's a cadence that we are hardwired to, a process of this, again, over all these idiot months that we have to do to get to November of next year. And all the states are jockeying to change this, to get power and to be first. And like the Iowa caucus. Should we go to the Iowa caucus?
Why not?
Why not?
Should have gone to the state fair.
I am so on board with that.
You want to go to the state fair?
I love state fairs.
We missed the state fair.
I know that you're being, a little bit
I would have.
tongue-in-cheek.
No, I would have been happy to go to the state fair. Yeah, sure.
Honestly, they're awesome. The pie testing contests.
Please, what is the high point of the Fargo State Fair?
It's great.
It's so good. Everything about it. I mean,
have you ever milked a cow? I've never milked a cow.
Yes, I've milked a cow.
You've milked a cow?
Yes.
John, have you milked a cow?
I've never milked a cow.
I've never milked a cow.
Maybe I milked a cow as a kid when you used to go do those farm tours.
Yeah.
You ever do one of those?
I've never milked.
Is that when you milked?
Yeah, of course. I'm not
just
a farm kid.
But we got to Jackson Hole, folks. You guys got to understand. Like they have lasso contests.
We're milking cows in Jackson Hole.
No. Oh yeah, it's big bison country.
Part of our show.
You go up Route 191, John.
We're milking
you come
bison.
out of Jackson. You take the Gulf Stream.
What I was
John, seriously, you take the Gulf Stream in. You go up Wyoming 191.
Right.
And like the bison are out in the field. The bison over here are monetarist. The bison over on the left are Keynesian. And you go up, you turn left at the lodge, you're there.
Are they making the decisions?
You're there.
Based on the policy decisions of the last couple of years, maybe.
Whoa.
Who knows?
Whoa.
Making friends.
If you miss your turn on the way to Jellystone Park, there's transitory Wyoming. It's a ghost town.
Banned from the lodge on Friday. You know why. Liz Ann Saunders of Charles Schwab's going to join us a little bit later. That's coming up next. In the market at the moment, equities on the S&P 500 positive 0.5%. The data out of Europe, how many times are we going to say this morning? Dreadful. Just absolutely dreadful. Deutsche Bank talking up a pause at the ECB in September. They've still got an inflation problem. It's just amazing to see the difference between what's happening in Europe, what's happening in China, compared to what isn't happening in the United States. Tom, the slowdown that never was in America.
Yeah, it is. I mean, there's no other way to put it. It's a serious slowdown. You're going to see it in the data. What I see is it does today, John, it goes across equities, bonds, currencies, commodities. What am I focused on? I'm sorry, Swiss franc strength. A 0.94 on Euro Swiss would be a huge deal. We're not there yet.
That's what you're focused on?
I'm focused on Swissy.
The next trip?
Swissy.
Swissy. Okay, good to know. From New York City this morning, good morning. Equities with a little bit of a lift this morning. Good morning to you all. On the S&P 500, we look a little something like this, elevated by 0.4%. On the Nasdaq 100, up by 0.55%. Yesterday, another day of losses. That's 5 days out of 6. We're down on the S&P. Let's see what today brings. The fate of that might be in the hands of one stock we'll talk about in just a moment. In the bond market, a 2-year, 10-year, 30-year. The 2-year getting comfortable around 5%.
Yeah.
499.68, down about 5 basis points this morning, Tom, but the 2-year very, very close to the cycle high.
Comfortable nails it. I mean, all of a sudden, it's like I'm getting used to these numbers. Lisa, have spreads come in? I mean, is there a dynamic to corporate spreads around a 2-year at 5%?
Well, just recently, there's a little bit of softness, but tight. That's been the story for a long time.
These are bid. Price up, yield down.
Yep.
People want to buy 7%, 6% coupons. They do okay.
Spreads consistent.
That was bond talk.
I would say spreads are consistent.
Consistent. Okay.
Yeah.
Yeah.
Because treasuries have moved, right? So anyway, we won't get into that.
It's not my world.
Okay. Yields are lower by 6 basis points on a 10-year right now, 4.26. Yields are lower by about 4 or 5 basis points on a 2-year, just sub 5%, 4.99.89. That's the bond market. Into foreign exchange, let's look at two currency pairs together. Data out of Europe, really, really not great at all. Out of the UK, not much better either. Cable breaking down by 0.8% here, so that's a much weaker pound against the dollar, 126.31. This is the latest from Nomura and Jordan Rochester. It's a set of data from the PMIs that could start the conversation of a euro at 105 in view for some folks, as rate spreads would already imply, but the stronger conviction from us is that it'll see pound sterling head towards 122. The view, Tom, from Nomura this morning.
DXY moonshot over the last 48 hours, 103.00. We're going to break 104 here by the time we get to the next hour. Moonshot. I mean, that's a serious move.
Some sizable moves out there, Tom. Yeah. Dollar stronger. Under surveillance this morning, the downturn in Europe gathering pace with Eurozone services PMIs coming in much worse than expected. Services coming in below the estimate at 48.3, dropping below the growth mark of 50 for the first time since late last year in Germany. In Germany, Lisa, 47.3 on services. Manufacturing, brutal. We're talking about numbers we haven't really seen much of outside of the pandemic.
And raises some real questions about the recovery in Europe, particularly how Germany is going to redefine itself in a services side recovery that's not really becoming a recovery anymore, with services now coming toward manufacturing the wrong way. Something that Virginia said that I think is really important is how much is this that the transmission mechanism of higher rates in Europe is faster, is more direct than in the U.S., and how much is this what the U.S. can expect down the line versus something tied to China, tied to how the rate structure is in Europe?
I couldn't agree more. There's a chart on my screen right now that's been doing the rounds on Twitter in the last 24 hours, and shout out to Robert Burgess here at Bloomberg for putting that one out there.
He should go to Jackson Hole.
The effective rate on outstanding mortgages. So not what are people being charged when they go to get a new mortgage, what are people paying? So we know that yields are near levels we haven't seen since 2007. We know that Fed funds is at the highest in something like 20 years. We know mortgage rates are pushing 8%. This is what people are actually paying right now. The effective rate on outstanding mortgages, 3.6%.
Yeah.
3.6%. Levels that we were at, I think, December 2020, something like that. 3.6%.
30-year bank rate right now, 7.61%. Substitute out your belief in what inflation is, and there's your real rate on real estate. You're underwater day one. I mean, that's all there is to it.
People aren't selling their homes. Seen that in the housing data.
I'm house shopping in
falling off a cliff.
I'm house shopping in Jackson Hole. I mean, I'm sorry.
I hope it's a cash purchase.
Four bedroom. And folks, look at the real estate. When you get a chance, look at the real estate in Jackson Hole. And I guess it's because of the taxes. Maybe it's Liz Cheney. I'm Tom Rush. I don't know. Everybody wants to be out there.
But that number, Tom, is why people can't buy and why people aren't selling. It's why this market is frozen. Just frozen. Yeah. And for those of you that would like that, the ticker on the Bloomberg,
let it go.
The ticker on the Bloomberg, USMIRATE. Just for anyone that wants that with a Bloomberg terminal, worth tracking. Chinese President Xi Jinping skipping a business forum at the BRICS summit where he was expected to deliver a speech on China's economy and its support for emerging markets. The no-show coming as China's economy struggles with falling prices and a faltering property market. TK, a no-show as the economy is not performing so well. I think notable at this point.
I'm going to be careful here and not editorialize. A study here in international relations is coming out of Lord O'Neill that we saw years ago at Goldman Sachs, Jim O'Neill. And the basic idea is the old BRICS, the modern BRICS, and if you take that, which side do they stand on? And to me, it's the age-old tension of China and India. And I mean, who is President Xi speaking to? Is he really speaking to India? Is there across the border, guns in hand? I just don't see it.
Well, publicly today, Tom, seemingly not speaking at all. The other story to look for after the close a little bit later, chipmaker Nvidia reporting earnings after the bell. The company soaring year to date on the back of optimism over AI, including guidance last quarter that came in far stronger than expected. Lisa, I think Dan Ives of Wedbush calling it the guidance heard all around the world back in May.
And it's a great way of setting it up, because how much is this an Nvidia specific, either upside surprise or profound disappointment? How high is the bar for Nvidia? But how much is this really what's driven the entire tech sector rally? And I know that sounds like hyperbole, and yet if you take a look at the Magnificent Seven, the incredible rally really was hinged off from NVIDIA's upside surprise that all of a sudden, it's not as if AI was created this year. It's been around for a while. Artificial intelligence is not new. But suddenly, oh my goodness, look at the potential for profitability. NVIDIA keyed that off. If they disappoint on revenues, does that key off the opposite reaction?
I'm going to gap this into two worlds. And my brother's really good at this, like, you know, an item in AI. There's a legit AI in GPT. He says it's earth-shaking. It is revolutionary, John, what these smart people are living right now. And then there's a whole other group which he calls unmitigated hype. And I'm guessing Nvidia, I can't even pronounce it. And Nvidia.
Why not? What if you want it to be,
Nvidia's in
Tom?
both camps, right? They're in the dead serious GPT camp, and they're also straddling games and all that, the hype camp.
AI hopes and frenzied dreams, I think we're calling it. That stock is up by more than 200% year to date. Just got this email, Tom, if you're interested. Spurs, Sheffield United, hospitality, $2.50 a ticket, September 16th. You want to make that happen?
I want to make that happen. We could hang out there with Def Leppard. Joe Elliott probably will be there. And,
Nice.
It'd be good. Adele.
What's that stadium like? I've still never been. It's like the one Premier
Todd
League
Stadium?
Premier League
It's
London
great.
stadium I've never been to.
You walk in, and they're playing Adele. She's a huge Tots fan. And they literally are playing Adele when you walk in. And it's like wicked American, fancy. And it doesn't feel like what I see on TV. Was it Luton? Luton?
We should go to Luton.
Luton? Or where you grew up, where it was tough, or West Ham, you said used to be really tough. I like the Ted Lasso ones, the smaller stadiums. Richmond, yeah. Well, Richmond,
Crystal Palace.
They got relegated. I mean, they're playing like.
Is that a spoiler?
What?
Was that a spoiler?
No, it's not a spoiler. Mohammed told me Richmond's playing QPR this weekend, or I think, or next weekend. It's going to be interesting.
Is that a spoiler? Because I've still not watched the new season.
Come on. Well, the British don't like the show. I've read that it's lost in translation.
I don't know about that.
In the United Kingdom. I don't know. Liz Ann Saunders joins us right now to save the show. Chief Investment Strategist at Charles Schwab. This is an important conversation given the gloom out there. What's the Saunders gloom measurement right now, Liz Ann? How gloomy is it in the land of equities?
So we really started to face problems at the beginning of June. Lots of conversation, obviously, about the concentration problem, the Magnificent Seven dominating pretty much all performance. At the same time, you only had 15% of the S&P constituents outperforming the index over the prior 60 days. So it was sort of this double whammy of concentration, which often happens in cap-weighted indexes, but such significant underperformance. Initially, we started to see some breadth improvement at the beginning of the pullback that we saw up the cap spectrum into those mega cap names. Now, unfortunately, we've seen this deterioration in breadth, and it's sort of across the board. And I think more has to be worked out there. Even on a day like yesterday, under the surface, it didn't look great. And these pullbacks tend to have three steps. The first step is you start the down move, then you get a little bit of a relief rally, and then you continue. I don't know if it's going to be into correction territory, but I think there's probably a bit more that has to come out.
You were right where I want to go. To review, folks, from 2021, the peak of the market, SPX is down 9%, 8%, whatever. And the recent pullback has just been a crater, down 4%. Listen, you got to be kidding me. You and I remember when a correction was a correction. Is the mathematics of correction, bear market, or dare I say down 35% still in place? Or are we in a new world?
Well, so we've gone now almost 600 days without hitting a new cycle high. That's a pretty extended period of time. And that suggests that this is more likely a rally, in a bear market. But we've all been surprised so many times with the unique nature of this cycle, and we still have the dip buyers that come in. And what's interesting is those mini phases that happen of the dip buyers stepping in. It's also when you see a lot of attention go down the quality spectrum. You get lifts in the meme stocks and the non-profitable areas. That's the segment of the market that I think you want to use trader lingo, fade. I think you want to continue to lean into, call it the quality trade, and just be mindful of FOMO down the quality spectrum, especially in non-profitable areas.
One area that has seen a large amount of interest, especially in light of this question around where we are in the cycle, has been consumer discretionary. And I'm wondering if you think people have gotten over their skis and the optimism that the savings won't run out for individuals. And I'm among those people that question maybe it's never going to run out. But then the Macy's CEO got on the call and said that credit card delinquency is ticking up pretty significantly, and really seeing consumers much more restrained with how much they're spending. Do you buy that story? Do you think that's going to come to the fore more?
I do. And if you have to peel a layer or two back from the onion when looking at things like broader retail sales or even individual retailers' reports to look at unit sales, the biases in terms of consumers moving more toward generic type brands as opposed to higher end brands. We also have to be really mindful of differentiating between nominal data, and a lot of retail data is expressed in nominal terms, and in real terms. And you're right. I think pointing out delinquencies is important. It's mostly been concentrated down in the higher risk segments, lower income, subprime, but you're starting to see it creep into more of the sort of quality segments on the delinquency side. I still think, though, that it's the labor market that is most important to ongoing consumption remaining somewhat healthy, even more so probably than the savings story, the excess savings. I think it's the labor market. And if we start to see more cracks in the labor market, I think the consumer could maybe shut down the spigots fairly quickly.
Liz, and what kind of cracks are we seeing now in the labor market?
Hours worked have come down quite a bit in this environment where there might still be labor hoarding. You're certainly seeing that. You've seen weakness in temporary employment, multiple job holders having gone up. You've had some bouts of an increase in unemployment claims. We've seen some of the commentary from some of the recruiting companies that are withdrawing guidance. So I think you're going to start to see it on the job openings, layoff announcement side of things. So there's still cracks, but they're wider than they were a few months ago.
Just happening really, really slowly, isn't it? Just much slower than we thought it would. Lizanne, thank you for the update. As always, Lizanne Saunders there at Charles Schwab. The excuses we've heard from retail in America over the last week, Walmart and Target talking about student loan payments resuming later on this year. Macy's sales are down. Delinquencies, to Lisa's point. Theft at Dick's Sporting Goods. Theft, Tom, that stock got absolutely hammered yesterday as they discussed shrink and how many people are just walking out the store.
And it speaks to
goods.
two Americas. It speaks to the political debate that we're going to see tonight in Milwaukee. And there's a part of America that's booming. We make jokes about it, but Jackson Hole is the antithesis of Dick's Sporting Goods down below 59th Street. I mean, they're two worlds apart, truly two worlds apart.
Well, in Milwaukee on that stage, Tom, I wonder if Chairman Powell comes up in this Federal Reserve. I often hope it's about the economy. Yeah. They've been playing to that. Yeah. They've been playing to that.
But I thought what Greg Valliere said about Ukraine was fascinating. Do they really sit on Ukraine for foreign policy? I don't know.
Yeah. All of that still to come later on this evening on Nvidia. After the close, there are people out there who think this report later on this evening is more important than Jackson Hole and Chairman Powell on Friday. Mandeep Singh of Bloomberg Intelligence on Nvidia next.
What's really important is less what we're going to hear from Nvidia, less what we're going to hear from Chair Powell, less what we hear. And overnight, we obviously had some moves from China, and more the price action in response to all of these things.
Julian Emmanuel of Evercore with a clinic there. You have the data, you can learn something from that, and then you have the way the market responds to the information. You can learn a little more, Tom, from that as well.
Dead on. It's gospel Ed Hyman 101. I'm going to dovetail Ed Hyman's persistent call on disinflation into Julian Emmanuel's call on you got to be in the market, but And the way you do it, and we make a joke about it, folks, but the Bloomberg helps here on the terminal. We can't just look at the stock market. You can't just look at FX. Witness Jordan Rochester looking near a 107 handle any moment. On euro, you got to look at equities, bonds, currencies, commodities. And John, you have to look at Nvidia.
You have to look at Foot Locker as well, apparently. I just want to squeeze this in. Another retailer cutting its 2023 forecast and pausing the dividend. Foot Locker in the pre-market getting absolutely hammered. Down by 15%. This after what we heard from Dick's Sporting Goods yesterday. This has been a difficult time. I'll also throw in Nike. Just bear in mind, Nike on a record
9 days
losing streak. 9 days, Tom.
I saw that in Zero Hedge.
Just in line with the Yankees.
And what's great is on Champs-Élysées, it's La Carte de Pied. And it's amazing. Have you ever been in one, John?
No.
I mean, you go in with the children, and they lighten the wallet instantly. I mean, it's like you don't go in a Foot Locker. You come out with a lighter wallet. And yet there they are, really
What are they
struggling.
buying? Air Force Ones and all that stuff?
They're trying to. We say
I went to
no.
a Foot Locker. I'm lying. I went to a Foot Locker a long time ago. I haven't been in a Foot Locker recently.
Yeah, but it's...
Are they still wearing those referee jerseys?
I think
Are
so.
they? Is that still a thing?
Anyway,
there is a story here, Tom, that we should probably discuss, Lisa.
It's retail, yeah.
It's the disappointment we're seeing in retail and some of the warnings we're seeing from some of these big players.
Is it just consolidation among the strongest and the largest, or is this something broader and indicating some kind of weakness? Just to give you the actual numbers of how disappointing the full year adjusted EPS forecast is, $1.30 to $1.50 from up to $2.25, a material downside shift as they take a look at how things are weakening. Again, is this just due to Foot Locker and due to online sales, et cetera, or is this something broader?
Can you help me with how you invest in a company that makes 4 cents on the dollar? It's like groceries. It's like, produce. If Kroger gets bananas wrong, they lose money. It's such a tough, retail is a tough business if you're netting out 4 cents on the dollar.
It's getting harder. Foot Locker saw softening in trends in the month of July. So cutting their outlook, the stock is negative by 17% off the back of some pretty ugly numbers from Dick's Sporting Goods yesterday on the stock side of things, Tom. And Nike on that record losing run.
Do you want to make 4 cents on the dollar net income come down the income statement, or do you want to make 10 times that? How about 45 or 46 cents on the dollar net income, up the income statement? Mandeep Singh knows Nvidia does better than good. He's been just wonderful with us on tech this morning and joins us. How will Nvidia move the market? I'm not asking you don't do buy, hold, sell. Yeah. You certainly don't do the guesstimate of what's going to happen. Is it at 4 o'clock today, John?
4:20.
We're 4:20. I'm stuck in some terminal somewhere. The answer is we're going to be stuck on our Bloomberg on our phone. What should we look for to come out in the headlines? What financial headlines matter?
The guidance. I mean, last quarter, the guidance. And last quarter, they raised guidance for this quarter by 64%. Now, the buy-side bogey is actually higher than the guidance they raised. So clearly, expectations have run up quite a bit. And what you're expecting is another beat and raise, but beat and raise by at least 20%. That's our view. And look, I think when you look at the confluence of factors that have helped them, easing of supply chains, China pull forward because there is a likely export ban, that is what's driving, that huge run up in the data center revenue growth. I mean, it could grow sequentially by 100%. This quarter, data center revenue.
But can we sustain that, John?
Well, we've had a ton of earnings already. I just want to Mandeep, from your perspective, can you get a read on Nvidia ahead of time based on the earnings we've already had? Or is Nvidia just a read on everything else?
Well, so Nvidia plays into this secular trend that everyone believes is going to be with us, at least for the next 5-10 years and even beyond. And that's where it's different from that crypto kind of uptick that you saw for Nvidia. At that time, Nvidia was the only player because everyone believed it was a niche market. Now, everyone is buying into Gen AI, and they are actually putting their CapEx dollars. In the case of hyperscale cloud vendors, they're spending about $1 billion in CapEx every quarter to buy these chips. Now, they could develop their own, and that's a big risk for Nvidia. That's what investors want to know, because they are up against the large internet and cloud companies when it comes to competition.
What about national security concerns at a time where a lot of people are gaming this out as the next big thing on both the good side as well as on security sides and concerns? Does it matter which areas of the world are buying NVIDIA chips most, where they see the growth now, but that could come into focus politically?
I mean, think about, how these chips are being consumed. They're being consumed on the cloud and on the internet. And cloud and internet serves everyone. So the physical location of the data center doesn't matter. Yes, the buyers may vary. It could be a Baidu or a Tencent, or it could be a Meta or a Microsoft or an Amazon. But ultimately, that's where this Gen AI chip capacity is being used.
I'm mentioning this because Saudi Arabia made a massive investment, I believe, in Nvidia and is trying to expand in artificial intelligence in a meaningful way. We know that there have been issues with China and some of their development of artificial intelligence. I'm just wondering how this plays into Nvidia as they expand globally at a time where there have been concerns raised about how some of this technology is going to be used and where the chips are really going.
Yeah, so far the export restrictions have been more on the leading node chips. So they have their latest H100 chip. They came up with a lighter version that's not based on the leading edge, or it has all the features. And that's what they are selling in these markets just to avoid the restrictions. But ultimately, everyone is looking to buy these GPUs because that's how you develop your large language models or you do your inferencing. And I think with NVIDIA, clearly they have the technology. They just have to figure out how to work through these export restrictions.
You're talking about paint drying. Mandeep Singh scheduled to be at the Battery Management Solutions Seminar for Texas Instruments in Dallas in October. That sounds like a bundle of fun. I want you to take NVIDIA today and extrapolate it out, obviously, to Microsoft, but to the Texas Instruments of the world, the silicon substrates of the world. Can you do that, or is it just discrete to NVIDIA?
No, actually, so Microsoft in their earnings said they are going to see a 1 to 2% point growth lift from Gen AI workloads.
Growth lift where on the income? Revenue?
On the Azure line, on the Azure revenue.
On the Azure line,
yes.
the subdivision,
yes.
the cloud division.
And so Google said they could see something similar. AWS, on the other hand, hasn't called out any growth lift because they are bigger in size.
They're working a 3-day work week. That's what that's about.
And so it does come down to, how the cloud guys actually make that available. I mean, ultimately,
the cloud guys are working a 2-day work week.
I hope that if productivity goes up this time around, we actually work less, but I fear we won't. Mandeep, thank you. Mandeep Singh of Bloomberg Intelligence. Let's get these two names on a screen. Foot-Locker, Nike. Foot-Locker cutting their outlook. A new range for you on earnings per share, 130 to 150. Previously, 2 to 225. The estimate, 198. The stock down 24%. Weakness in the month of July. Tom, inventories much higher. Stores being closed. It sounds brutal, doesn't it? This is the kind of move we saw yesterday on Dick's Sporting Goods. You're seeing it on Foot Locker right now. And Tom, that 99-day losing streak could well become 10. That stock, 99, we're down by 2.4%.
I'm going to go to this phrase, John, I hate, omni-channel, which I've hated from day one. Oliver Chen taught it to me. What's he know? But the bottom line is Foot Locker I perceive as stores and malls. And the answer is, are we buying all of our sneakers off the internet now, where Foot Locker's cut out versus other providers?
Possibly, to some degree.
I'm just making this up.
But Tom, for Nike right now,
can you see me in a
they've
pair
got a
of
problem
Nikes?
over in China as well. Weakness there too.
Can you see me in a pair of Air Jordans?
Yes, I can. I can see that working. I can see that working. What are you wearing now? Pradas?
Yeah, I got my Jackson Hole shoes on. They're like,
ready to go. Thanks for interrupting what was otherwise going to be a serious conversation about what's happening in retail, Teak.
Retail's getting hammered. That's the discussion.
Well, it's more than that, though, right? There's a larger question here about discretionary spending and whether the savings is really coming up. There's a larger question about whether this is the weakest players getting beaten out during a high-rate environment, or whether this is something broader that really speaks to a consumer. I keep going back to what the Macy's CFO said yesterday. The speed of the increase in bad debt since the first quarter was faster than planned. Charge-offs, concerns about ability to spend. Yes, there's specific stories. There also is something else going on here.
What we've heard from these retailers in the last week is inconsistent with what we see at the headline, the labour market. Lizanne did a wonderful job of going through some of the weakness you see elsewhere. But Tom, right now, the headline is 3.5% and payrolls growth is pretty decent. The guide you're getting from some of these retailers is not that consistent with that.
I just looked down at Mandeep's shoes. He's wearing the Roger Pro Clay.
How much are they?
It's like $300 a pair. He's like all tennis.
They're expensive.
He didn't get them
right?
at Foot Locker.
Nice. Like Federer own brand. Is that what that is?
Off the set.
How high can rates go before it becomes almost self-limiting?
The policy rate is going to rest on a high plateau for a while. That's going to feed into longer-term yields.
We're still within that transition period where we could have a very interesting trend environment.
We had the biggest surge in inflation in 40 years, and while headline has come down, core is still sticky.
We're seeing some cracks in the consumer, but broadly speaking, we still are pretty upbeat.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Retail is not having a good time. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market's just about positive by a third of 1% on the S&P. It's the big one a little bit later after the close. You'll hear from Nvidia already this morning. Another retailer in a world of trouble. Foot Locker down in the pre-market, Tom, by 25%. A quarter of the market cap gone. Just like that.
On the break, when you saw Big Little here, Bramo was really intelligent here on the split here economically. This is not about luxury. Even LVMH is off, Hermes is off, da-da-da-da-da. This is about America in a certain part of America flat on their back, and that's the tension that you'll hear at Jackson Hole. I'm going to suggest Jerome Powell will address this middle part of America that feels like they're in recession, and you see it in Foot Locker this morning.
Just some warnings starting to pile up, Lisa. You mentioned Macy's and delinquencies that they flagged. We can look at what we heard last week from Walmart and Target flagging student loan repayments. They were flagging that as well. And then Dick's Sporting Goods, a world of pain yesterday for them as well.
And so some people might say, well, these are each specific stories that are losing share to others. It doesn't necessarily represent the entirety of consumers. They still have money, although it's running out. That said, clearly the buck is starting to stop. And if a company is weaker and they have to borrow money to keep their business model going, they are going to get weeded out faster. This is what happens when an era of free money ends. And this is where you're going to see these potholes that continue to accelerate and may indicate something broader.
2023, the great zombie roll-up. When I invented that phrase, Lisa, I did not think about 5% 2-year. I did not think about the brilliance from Katie Kaminsky, I think yesterday, about looking at 6% is a what if. I did not think about moments ago a mortgage headline comes out across the Bloomberg, a 7.x%. That's how you get to a zombie roll-up.
When mortgages cost that, Tom, you don't buy.
The math,
that's what's happening.
Exactly.
Yes. Home purchase applications dropping to the lowest since 1995. Surprise, surprise, as the 30-year fixed mortgage rate jumps to 7.3%, the highest since 2000. You've got the price tag, Lisa, and then you've got what people are actually paying, and it's far less than 7%, given the average rate on mortgages right now. The effective rate is much, much lower.
So have we seen the effect of monetary policy? Have we seen the effect of higher yields if no one's actually paying them and if people are doing everything in their power to avoid paying them? And this is sort of the existential question that I want to hear from Jay Powell and, frankly, in more the side chatter at Jackson Hole, where there's this feeling of victory. We did it, guys. This is a good thing. We're seeing the likelihood of a soft landing increase. Is it? Or are we seeing just markets adapting for the time being, holding out hope that the Fed's going to cut rates sooner?
The charts give pause. You look at the Wall Street Journal article yesterday, Colby Smith overnight in EFT, what Bloomberg Economics is doing. You can talk, John. Just look at the charts, and so many charts are just rolling over. There's no other way to put it.
Let's look at the charts right now. Futures rolling over just a little bit. We're positive by a quarter of 1% on the S&P 500. Futures slightly higher. Yields are coming in 7 basis points, 4.2568 on a US 10-year, and the euro. Haven't mentioned that this hour. Took about 3 minutes for me to do it. I apologise. The data, dreadful. Dreadful. God. Euro weaker. Euro dollar here, Lisa, 108.05.
And people expecting possibly the ECB to remain on hold for just a chunk longer as they try to assess that. 1 p.m., I'm really watching this. The U.S. is planning to sell $16 billion of 20-year bonds at a time where we've seen yields climb to the highest going back 16 years. Where does the demand come from? 20-year is sort of a hairy issuance anyway, so how much demand will really perhaps set the tone in markets? After the Bell Nvidia earnings, everyone's looking for whether they can justify a 200% gain so far this year, more than that. Can they deliver an upside surprise? Mandeep was saying, what, of 20%, which can keep this going? And at 9 p.m., it launches. It is the first primary debate of the Republican Party beginning in Milwaukee, and there are 8 candidates, former President Donald Trump not among them. clear focus on Ron DeSantis, clear focus on Tim Scott, clear focus on issues that we haven't been talking about as much as maybe some people would like in terms of Ukraine. We heard that from Greg Valliere, as well as the deficit in Social Security.
Lisa just killed that. I mean, she could just, when Horton's off on one of her 14-week vacations, Lisa could bomb down to D.C. and just kill it.
Balance of power.
No, but you could do both. You could get up. No, Lisa, you could get up and do the 6 a.m. and then do the 6 p.m. as well.
Oh, that's so sweet.
It's so sweet.
Lisa can't wait for that. That's great. Anastasia Amoroso with us in the studio, Chief Investment Strategist over at iCapital. Anastasia, good morning to you.
Good morning. Good to see you.
Should we be worried about what's happening with discretionary spending?
I mean, there's definitely some dichotomies going on, and I do think that part of it has to do with what consumers are prioritizing. They're continuing to prioritizing services, they're continuing prioritizing, food and drinking places, and they're not so much prioritizing retail and furnishings. And I think that's part of what we're seeing in some of those retail earnings. That's really the undertone. But I can't be worried about the state of the overall consumer because when I look at the unemployment rate, it is still low. When I look at excess savings, yes, they're diminishing, but they're still kind of diminishing from a high level. And, wage growth is still running at 4.4%. So I can't be worried about the overall state of the consumer. I think some of these are idiosyncratic stories.
I love your note that Chairman Powell will not save the day. Thank you for bringing Jackson Hole rationality in here. I would suggest he will look to August 31, and I believe it's September 31, inflation data. Will it shock us with disinflation?
The core PCE numbers should continue to show disinflation, or at least stagnating around this 4.5%, 4.7% level. But the one print that I am a little bit more worried about is the CPI print, which is September, September 13th, before the Fed. But I worry about that because we've got food prices that are creeping higher, we've got energy prices that are creeping higher, and so I worry that the headline numbers are going to start rising by more than 0.2%. And per month. And the big deal about that is if you have this speed of 0.2% increases or more, we actually might start to see year-over-year headline numbers continue to rise. So, maybe the core disinflation continues, but the headline may point the other way.
Which raises a question about this from the former St. Louis Fed President Jim Bullard in an interview in the Wall Street Journal this morning, saying, I think it's turning out that the Fed's policy has been very successful, and I think that will be the buzz at Jackson Hole. I don't know what will be in the speeches, but the talk will be that this has been quite successful. Are you concerned that they're going to declare victory before they really even have the data to understand where we are in the cycle?
I don't think this is the moment to declare victory. I mean, yes, I know on the one hand you want to say, inflation is declining and we've got economic growth, but we have 5.5% interest rates and we have close to 6% GDP. I mean, that is not a soft landing economy. That is a no landing economy. That is an accelerating economy. So I think they have to take a hard look to say how restrictive are they actually being.
Given this sort of backdrop, where are you in terms of leaning into risk or backing away? We hear Liz Ann Saunders saying that she's just on the margin cautious. We hear others leaning in and adding risk, expecting there to be a recovery trade starting early next year. Where do you fall?
Well, I think you buy the pullback, and you especially buy the pullback in some of the artificial intelligence stocks. And as you know, we've been looking for some sort of consolidation and maybe draw down back to 100-day moving average levels on the S&P. But I do think you buy that because, Lisa, it goes back to the point that the Fed at this moment in time may actually not be yet restrictive, especially if they have a rethink about the so-called neutral rate, which is neither restricting the economy nor accommodating. And if that's the case, then we have the economy that might just keep going. So that's the cyclical side of it. And the thematic side of it, artificial intelligence is one of the most far-reaching opportunities. And you've got stocks in the AI beneficiary basket that are down 15, 20% from their recent peaks. I want to buy those.
You mentioned 6% GDP. Lisa, I just looked at Atlanta GDP now, 5.76%. To me, that's a complete fiction. I had a guy once in Beloit, Wisconsin, email me in anger. Said, Tom, the unemployment rate here at the time was 14%. America's not feeling a near 6% GDP economy. I mean, not even close. I mean, I really take issue with that. I love in your note, buried. I don't know why you bury it. You should put it at the top. The way you make money or not lose money in this market is to look to companies that don't rely on leverage. That's the smartest thing I've heard with a real yield where it is. What kind of companies don't use leverage?
Well, you go back to technology. You go back to tech companies that historically have not heavily relied on leverage. And you also look to private markets, for example, growth equity strategies and venture strategies that invest in things like artificial intelligence, but they don't borrow heavily to do it. They're not leveraged buyout companies, but rather they're investing equity.
John, Nvidia, crushing debt. It's like Warner Brothers Discovery, 1.7% debt in Nvidia.
Anastasia, thank you. It's good to see you.
Thank you.
Anastasia Amoroso there of iCapital. Here goes another one. It's Peloton. They see quarterly revenue at 580 to 600. The estimate's 647 to Tom. The estimate's 647.8. The stock is down by 18%. TK, translate this for us. When a company turns around and says we don't expect to remain free cash flow positive for the upcoming quarters, what's your response to that?
You know, it's not a 4% business. This is what's known as a loser. I, with great respect for the people that are there, I feel sorry for the sell side. We got how many analysts? Let's see. We got 27, make it 30 analysts following this dog. I don't know what to do with it. Talk about a zombie. Who's going to buy him? Apple?
Dog, zombie. I feel sorry for the South Side. This is how you keep in touch.
Do you know
with
how much?
TK.
Do you know how many Pelotons? Look, in my walk-up, you know, we got a Peloton in one room. We got another Peloton in another room, and the only common thing with the 3 Pelotons we have is they're all gathering dust. I walk around and go, "Is anybody going to use this stuff today?"
Stock's getting hammered. To Anastasia's point, some of these stories, Lisa, would be idiosyncratic. I would suggest this is one of them. Elsewhere in retail, there's still a lot to talk about.
Okay, well, how many idiosyncratic stories before suddenly we have a trend? And I understand that these are the weaker players, but is this just the weaker players getting pushed out at a time where there is more discretionary kinds of behavior? Or is this something that is broader, that is people pulling back in certain corners? Peloton's its own story. I mean, let's just put it that way.
Peloton has a Peloton problem.
Yeah. What was it? Big? Chris, what was that? Like the Mr. Big?
Oh, Sex and the City.
Sex and the City.
Oh, you're bringing that one up again.
Well, I mean, it was like sort of the emblematic.
Heart attack.
So bad.
The heart attack.
Yeah, I think that was
it
marked the downfall.
Isn't that like 2.5 years ago now?
Well, but that marks the rise and fall, right? I mean, it was like the hot thing.
That was the peak.
And then, have you seen it since then?
What, Peloton or Sex and the City?
Both. Peloton. I'm talking about Peloton. I know you watch Sex and the City.
I haven't watched the new stuff. I haven't watched the new stuff. No.
It's just your old school.
John, Claudia Sam just put out on Twitter the photo of the lodge at Jackson Hole, and I can see your room. You got the rock star room, 2 down from where the vice chairman sleeps. That's the one with a spider web. It's got spider web. Do you look under the bed for snakes?
It's so cute. You think I'm staying at that hotel with you. If you're just tuning in, welcome to the programme. On the S&P 500, futures rolling over here, just about positive by 0.1%. Joining us a little bit later, Lisa Shallard at Morgan Stanley. Just a fantastic guest, Tom. Coming up at 7:30 Eastern Time, so that conversation, 20 minutes away.
That's going to be interesting to see. We've got Lisa Shallard coming up. Dr. Weissman will join us as well from Macquarie. Back-to-back, Terry Weissman and Damian Sassower. John, when we invented this, that's what you want. We got 30 minutes of encyclopedic knowledge on EM and the challenges of China.
Very, very cool, Tom.
Yeah, very cool.
Can I just bring you this little tidbit from Peloton? Evidently, their new expansion plan is to partner with college campuses. And they're looking to instate Peloton bikes in college campuses in their new business
program. Which is why we're paying $75,000 for some fancy pants. School.
They're working with University of Michigan starting off. So that's sort of their way that they're trying to
issue them a slide rule, and it'll be a better world.
Well, it's just sort of interesting, sort of how they're looking to new areas of growth. That's what they're talking about.
Weren't some investment banks giving away Pelotons? Do you remember that?
Yeah.
We turn to our expert, our Peloton expert right now. Anastasia Amoroso joins us.
You get a bike.
What do you think? Peloton, thumb up, thumb down?
I think that might be a pandemic thing. Tom, if I had one, it might be sitting in the corner as well.
Yes, thank you.
You using that as a walker? Is that what you were doing off camera just a moment ago?
What, the Peloton?
Yeah,
that's what it's, you got to get up. It's like Soul Cycle. I did Soul Cycle. Courtney Collins
trying to break numbers.
Courtney took me up to Soul Cycle.
You're so distracting. From New York, this is Bloomberg.
Key message of Chair Powell at Jackson Hole is going to be the policy rate is going to rest on a high plateau for a while. He's got markets about where he wants. The main message he's going to want to send is rates are going to be around current levels for a lot longer than you think.
Higher for longer, the message from Vince Reinhart there, the chief economist and macro strategist at Dreyfus and Mellon, your equity market. Well, you were grunting as I was reading.
Yeah,
it's difficult,
was.
Tom.
I'm trying to figure out the Yankees. Okay, I'm going back and forth with Doug Cass. They've lost 9 in a row. I'm upset.
Can I get to the price action?
Please.
Thank you. It's good to see you. Equities positive by 0.1% on the S&P. Yields are down by 7 basis points, TK. Your 10-year, 425.68.
And it's going to be interesting, to say the least. John, what's the data point that you see today that really matters to you? What's a single data point we got to look forward to?
Dollar strength. Dollar strength.
Yeah, 103.91
Off the back
DXY.
of some really soft PMIs out of Europe, both the UK and the Eurozone.
Yeah, for everybody who gets no more literature, read Jordan Rochester today. He doesn't mince words. It's at a tipping point this morning. Pay attention to that. Into Jackson Hole. Not paying attention to Jackson Hole, Anne-Marie Horton joins us now. Bloomberg debate correspondent. She nailed debate in high school, took it further in college, and now debates on balance of power. What will you focus on in balance of power is the pre-intro into the festivities in Milwaukee?
Well, I think it's going to be interesting to see how each of these individuals really try to define themselves away from the incumbent they are fighting on the stage, who will not be president, and that's the former President Donald Trump. And I don't mean so what they think about Trump, because we pretty much have a good idea of how everyone is going to deflect when it comes to, or attack when it comes to the former president, but when it comes to policies, because when you look at a latest poll over the weekend from CBS, YouGov poll, what you see is that voters are craving to hear about what these candidates have in terms of their plans for the economy, most notably inflation. So you really want to see who is going to come out. And then, of course, when you think about past debates, it's always those moments you cannot prepare for, when someone stumbles, when someone makes a gaffe, potentially when there's a bit of bickering or a modern-day version of a brawl on stage. Those kind of moments is what you want to see, and who in the next morning is going to potentially pop and get all the limelight. But we should note that that limelight that someone potentially can get Thursday morning is really going to be overshadowed within those 24 hours, because former president says he will turn himself in Fulton County, Georgia.
The former president, if you take him out of the mathematics on radio, folks, we just showed a great bar chart showing President Trump way out in front of everybody else. I'm sorry, DeSantis has a massive lead over everybody else, 19%, and the next one is 9%. I don't even know who it is. It doesn't matter. What's the DeSantis plan against Bidenomics? Is he going to come out tonight and act presidential and give us a DeSantis, I can't even say this, John, help me, a DeSantis-nomics plan?
Well, one thing, he will come out, I think, looking and trying to act as presidential as he can. He is with one of the best debate preppers this country has ever seen. When you look at the track record for this individual, this is what he's been quoted about for years, an individual who prepped in 2004 former President Bush when it comes to the debate stage, and something that we've learned from the DeSantis camp, according to reporting from our colleagues, that he has actually been doing this for months. So he has been preparing for this moment. He'll also be center stage, the way the RNC does it, because he is leading in the polls. He will be in the center. So with Donald Trump not there, DeSantis's camp is really expecting all these attacks to happen on him. So he needs to differentiate himself, not just from the former president, given the fact that he is going to be the leader in the polls, only physically present on the stage, but when it comes to Biden. So you can expect him to go after the culture wars in corporate America, saying corporate America has gone too woke, but also he will go after inflation, which I think you're going to see really all of these 8 candidates across the board go after Biden when it comes to inflation. And they're going to say that Bidenomics, what this administration calls their economic plan, has failed.
How much is the audience going to be the primary voters, and how much is it going to be the general election voters?
Well, it's interesting because, of course, you have a primary, and to get to the primary, these individuals are going to have to show that they are as far right as they can be, right up against the former president, to get that primary vote. But then, if they are the ones that become the nominee, they then need to really start to move more moderate, especially when it comes to issues, if they're asked about Social Security and Medicare, if they're asked about issues like abortion. These are issues where they're going to want to make sure that they can pick off these independents in a general election. So that won't happen just yet. You're going to definitely see them really try to gear towards those primary voters, those caucus goers, because those are the ones they need to win right now.
So many strategists have told us that the only way to actually bring the deficit into check is to do something about Social Security, either by increasing the revenues for it or by cutting benefits. Have we heard any of the candidates really address in a comprehensive way, head on, what to do with those particular expenses?
Well, they're likely going to be asked about this evening, because when you look at the polls, this is what individuals want to hear about. They want to hear about the economy and inflation, but those individuals in America, those voters who are older, in their 60s and the 70s, they want to see a comprehensive plan. We have heard from some candidates who say, Mike Pence has talked about this, Governor DeSantis has talked about this, that they want to make sure that Social Security does not go insolvent. So there needs to be a plan going forward. The plan would then hit those that are younger, but they want to make sure that those that are older are protected.
I'm afraid to ask Anne-Marie, they're going to do the spin tonight. Do you go to the room? Are you in the spin room? Are you allowed to go in the spin room, or can only Joe Matthew brave the spin room?
I believe actually it's the first time that Fox is opening up the spin room to other journalists from other outlets.
Yeah.
So you can expect the spin room to be mobbed with
What
individuals.
happens in the spin room? I'm trying to think of Sir Keir in London, in the spin room of Labour politics. What happens in the spin room?
Well, they get their surrogates out there, and it's their cheerleaders, right, to say this is why our candidate did the best and try to diffuse any issues that happened potentially on stage. But I don't think people really remember what the surrogates say in the spin room. They just remember those moments on stage.
What do you think of this, Jed? This is insane.
Well, the spin room.
The spin room, the whole process is nuts.
That's a long history, Tom, doesn't it?
It used to be it was JFK and Richard Nixon, and it was about the dog and pulling the ears.
You're trying to shape the way journalists tell stories. That's what you're trying to do.
Should we do a spin room out of here?
With Peloton.
Have the guests, all of our guests there with,
It sounds like you want to go.
Oh, no, God, no.
Don't fancy it?
No. Okay. Maybe if they ran it in black and white, that would be good. It would harken back to when it was a real debate.
Got to thank Anne-Marie. MH, thank you.
Spin room.
Down in Washington, D.C. One name to watch right now, Foot Locker, getting absolutely hammered. The retail theme just continues. This stock is down by 31%. They've had to cut their outlook. Inventories are up. Demand softened in July. This off the back of some pretty dreadful guidance from Dick's Sporting Goods as well. Nike on a 9-day losing streak. Well, that's about to become 10 at the opening bell. That stock is negative here, Lisa, by 3.4%.
I want to just draw a comparison with Foot Locker and Dick's Sporting Goods. Like Dick's, what we saw from Foot Locker is they mentioned theft as one of the main reasons why some of their sales have disappointed, in addition to everything else. I just wonder if the physical stores that some of these companies operate are becoming liabilities in new ways that they're struggling to really get their hands around, especially because they didn't have as clear of a business model or one that was that strong beforehand. And that there's a social issue here, too, that's compelling to me.
Oh, without a doubt. I will be shocked if this does not come up on the debate stage later on this evening.
Agreed.
I will be so surprised, Tom, if they don't talk about the theft that's taking place in some of these stores.
It's real. I was in with the illness I've had, I've been in a number of our pharmaceutical emporiums, and I'm sorry, people are going to think I'm an old fart. No, please. The answer is, John, you go into
What was the please for? Please don't.
Please,
you go into a drugstore today, and I don't know about where you live across America, but I cry when I see these plastic things with a little key thing in it. It's sad.
Are you telling us that you've been off because you've been running CVS crime rings?
Yeah, no,
is that what you're suggesting?
Can we just lose this name? Can we just lose
I can't believe
shrink?
they lock it up now.
You brought this up. You were dead on. Lose shrink.
It's theft.
It's theft.
Thank you. Yes. Yeah. Terry Wiseman, Macquarie, up next. Equities just about positive here, struggling to bounce. The S&P 500 up by 0.1%-ish on the S&P. On the Nasdaq up by a similar amount. A lift for the equity market, but just a little one. Some earnings out there, raising some concern. We'll talk about that in a second. In the bond market, 2-year, 10-year, 30-year. Let's slice up the yield curve. Your 10-year is down about 6 basis points, 4.2588. 30-year down 5 basis points to 4.35. If you've been away for summer and you're just coming back, well, yes, we've had quite a sell-off in the Treasury market. A reset, a 2-year, Tom, in and around 5%. And yesterday at the close, something like 3-4 basis points away from a new cycle high at the front end of the curve.
I'm going to go to the real yield. The 10-year real yield, 1.91% down from that shocking 2% level. And that will be, and I'm not thinking it's unspoken at Jackson Hole. I think it'll be part of the debate out there. Is central bank and monetary theory in a new rate regime, and particularly a new real rate regime, going right over, John, to the R-star debate front and center?
If you'd asked me about a month ago, Tom, I would have talked about resilient economy, the tension between the progress we've made on inflation and the fact that things are still pretty robust in America. If you ask me now what the main event might be in a couple of days, global slowdown for me, what's happening in China, what's happening in Europe, very much the focus, and we'll talk about that in just a moment. Two currency pairs for you. Look out below. Sterling, the euro, weaker against the stronger dollar. Cable right now, 126.35.
Edge of Brexit.
Negative 0.75%. TK, a weaker pound off the back of some weaker data across Europe.
And I haven't looked at the technical charts, but you break support or resistance depending on the currency pair. And, you're there, and we're there. DXY, 103.87.
Under surveillance this morning, here's the name we want to talk about, Foot Locker, sinking in pre-market trading. The company pausing its dividend, slashing guidance for the full year. The stock also weighing on Nike as it could extend a record losing streak after falling for 9 straight days into today. Lisa, Foot Locker is down by 32% in early trading.
To $15.86. So people are not particularly full of conviction. In terms of the business model here, what is the business model at a time where people are going direct to consumer, at a time where people are shopping online, and a time where their stores are facing physical difficulties with respect to theft and with respect to the real estate footprint? There are a lot of questions here. The larger one is, are these idiosyncratic stories? Perhaps. Does it suggest something broader about a weakening in terms of consumer appetite, particularly on lower income levels? And that, I think, is something we're going to have to parse through.
Does it go beyond physical retail? Given what you've just said, Nike's down 10 straight days now.
Nike is connected to China. So all of these interconnected stories are kind of coming together. Foot Locker, more of a U.S. story, but Nike very much connected to the global slowdown that you just mentioned.
Just amazing to see some of the weakness, and these stocks get absolutely hammered in the pre-market. Odds climbing that the ECB is going to hit pause in September. Weak PMIs out of Europe, getting everybody's attention this morning. The headline reading falling further into contraction territory for the last month. Flash PMI data out of the UK also in lower than expected, with higher rates hitting demand. Tom, in Germany, I think what might get your attention would be what's happening with manufacturing in the 30s on the PMI. But I want to focus on services. The fact that services are coming down to manufacturing in Europe is not coming up to services.
Does Lagarde rewrite? I believe it's a Friday or Saturday speech. I mean, what does she do? She got to rewrite it. I mean, I'm sorry. There's literally going to be sentences they're working on right now in Frankfurt, or the entire ECB takes off 6 weeks. I mean, that's the way they do it. But are they at Saint-Tropez or wherever rewriting the speech?
Oh, keep
right
going,
now?
please. This is good. This is good. Can't wait to see if Lagarde sees you on Friday.
Hi.
Yeah.
Yeah.
Okay. Let's finish with this. UPS, the workers approving the $30 billion labour deal tentatively agreed to last month. Roughly 86% of employees voted yes. I want to know who said no.
Exactly.
A Teamsters record at UPS. The 5-year agreement will go into effect after a local Florida affiliate votes to ratify a supplemental agreement. That sort of technical stuff. Bottom line is, big deal over at UPS. Tom, big deal over at American Airlines as well. And to Lisa's point, she said this a couple of times in the last couple of days. We haven't had the strikes, we've had the pay rises.
Yeah.
Let's see if that changes.
And, of course, there's a Hollywood distraction as well. I guess they're trying to move forward there, and it's based out on what I see in Twitter. It's a challenge, to say the least. What is important here at Surveillance is we like to focus for 30 minutes on a theme. Damien Sassower is scheduled to darken the door on EM and the market dynamics, and far more, John, is to speak to someone, including the frontier economy, Europe, and that would be Dr. Weissman with all of his work at Bear Stearns and now at Macquarie.
It's Harry. Good to see you. Fantastic as always. What a change over in Europe. We thought this year would be good, driven by China reopening. How important do you think the global slowdown is going to be in Jackson Hole this Friday?
Not too important, because I think that the theme of the symposium, or the conference, if you will, is not the short term. It's not the cyclical themes. The theme they've laid out is the structural changes in the global economy. And when you hear something like that, you think that the speakers are going to be directed towards talking about things that happen a year from now, 2 years from now, 3 years from now. As far as Powell's speech goes, look, the Fed could, if it wanted to, pat itself on the back. Inflation is low in the U.S. The economy looks a bit robust, at least in certain quarters. But I don't think it's time for him to do that. there are still too many hawks on the FOMC panel that are nudging him towards at least sounding as if he should be hawkish from a medium-term and long-term perspective. When you think about those narratives about the global economy that are structural and longer-term in perspective, they are things like climate change, deglobalization, demographic change, high debt in the emerging markets. Those are all things that sound inflationary, at least two of them feel like negative supply shocks. So I don't think he'll be inclined to say much about the short term and the outlook for the Fed funds rate. I think he will focus, if he sticks to the narrative of the symposium, on those longer term considerations. Right. And that will mean that he's going to stress that it's going to be difficult to get to that last mile of inflation decline from 3% to 2%. And therefore, don't expect rates to be cut.
I look at Europe, and what we're going to hear from Powell and from Lagarde and other worthies are going to be there is, well, and I look at our start as a debate here. It's an academic debate of a full and running economy. In Europe, whether it's Eurosclerosis or something new, can there be a European R-Stard? Can you do legit economic analysis of the European experiment?
You can, and I think you can do legitimate analysis of the current cycle in Europe, this weakness that we're seeing both in manufacturing and now in the services. I think to a large extent, the manufacturing slowdown in Europe is coincident with the Chinese manufacturing slowdown. I don't think you can separate the two. Look, China had this massive slowdown in manufacturing in the second quarter. Well, look at that. Europe had a massive slowdown in manufacturing in the second quarter, too. We know those economies are connected through the German industrial complex and the export economy in Europe. So I don't think that's too much of a mystery. China and Europe are coincident. I do think, however, that this services slowdown we're seeing is also analyzable, but I think the focus has been too much on what the ECB has done with rates. It hasn't been enough on what the ECB has done with liquidity that it issues to the banks. The TLTRO program has been winding down out of the ECB for a few months now. And if you look at credit creation coming out of Europe, the extent to which banks have issued credit to the private economy, it has flatlined. And that's the reason why Europe is now seeing this slump in services.
Just to underscore this, in other words, the slowdown in services is directly related to the transmission mechanism of ECB policy, not necessarily what's going on with China, correct? Is that basically what you're saying?
That's right. But
okay.
What I'm also saying is don't look at rates. Don't look at the deposit rate being at 3.75%. That doesn't really tell you much about what's going to happen to the European economy. Look at bank credit. Look at broader monetary aggregates. They have flatlined in nominal terms. They're actually down year on year in real terms. It's the credit economy that people don't focus enough on. And if they had been focusing on that flatlining, they would have predicted the slowdown in aggregate demand in Europe.
Is the European economy so different from the U.S. economy in terms of the rate structure and the lending structure that there is no analog to be drawn in terms of how higher rates in Europe are affecting the economy and how they will eventually trickle out in the U.S. economy and affect the economy there?
They should affect the U.S. economy the same way, but there is an important difference between the European economy and the U.S. economy, and that's as follows. The European economy is overly dependent on its banking system for the extension of credit. They really don't have non-bank lenders. They don't really have direct lending in Europe. Everyone who wants a loan ultimately has to find his or her way to a bank. In the U.S., it's completely different. Now, if you were just to analyze the banking systems in Europe versus the U.S., you'd find a lot of similarities right now. You'd find that credit is contracting. You'd find that loan officers in the U.S., just as in Europe, are much less willing to extend loans. Maybe the reasons are mildly different. Maybe in the U.S. it has to do with regulatory overhang. Maybe in Europe it has to do with what the ECB has done. That's the similarity. The difference, though, is that the U.S. doesn't have to depend just on its banks. There are other sources of lending to support the startup economy, the legacy economy. We don't have that in Europe. And therefore, when bank credit contracts in Europe, you feel the effect on aggregate demand much more than you do in the U.S. And I think that's what we're seeing now. The U.S. will catch up, though.
There is a time for a surveillance audible. We will do it right now with Thierry Weissman as well. Years ago, you would publish with Emmy Sheo, David Malpass, and the rest of the clan at Bear Stearns on Latin America, and the world would stop. Argentina, do we care, or is it just the problem child of our lifetimes?
I don't care. I think it's the problem child of our lifetimes. It's not that well integrated into the global economy. Yes, it has some commodity exports, but
lose the hysteria.
Yeah, lose the hysteria on Argentina. It's not terrible, by the way, that they may have a president that's going to adopt some radical market policies in the final analysis. When you have a situation like this that hasn't been working for more than 4 decades.
Why are we scared of something new?
Why be scared of something new? Exactly. I would be much more scared of something old.
Okay, so what should the IMF do? They've been handing them out gazillions. They're going to write a check in Morocco, I assume.
The IMF should just wait. You cannot make a decision with regard to the extension of credit until you see what the political economy is. Let things simmer for a while in Argentina. Let's see what the policy agenda would be under a new president or a legacy administration, and then make a decision.
Terry, thank you. It's good to see you, as
My
always.
pleasure.
Terry Weissman there of Macquarie on the global economy and all the rest of it, including Argentina as well. Message of the morning, maybe of the week. This here from Thomas Thornton across the Bloomberg. The best trade in 2023 was the pair trade. Long Eli Lilly, short Foot Locker. People are taking shots versus taking walks. What do you make of that, Tom? They're taking shots. They're not taking walks. Isn't that good? Took you a while, didn't it? That's really, really good.
Classic.
That's
it's
really
sort of an
smart.
indictment of the American
But wait,
culture.
wouldn't that
you
be
know,
really
yeah.
smart?
No, that would be Diageo Foot Locker.
Diageo Foot Locker?
Yeah.
What do you mean?
Taking shots. I mean,
No. Taking shots as
No,
in, like,
shots.
lose weight.
Oh.
Like Ozempic rather than
Yeah.
going to the gym.
Oh, I'm not. Yeah, I tried that. It didn't work. I thought it was a different
Straight
shot.
over TK's head.
No, sorry.
No. Not Diageo versus... No.
Yeah,
Cherry didn't get it
If
either.
you've got to
Good, I
explain
feel-
the joke,
I'm a
it's
good
not as good as it. I read it.
really
I got
fun.
it straight away. I thought that was great.
I said an indictment on American culture.
Somebody said,
Like, yeah.
"Are we wearing
Yeah.
Western cowboy stuff at Jackson Hole?" I said, "One, we're not there for 2 cups of coffee, but no, we're going. It's like a business thing. It's like
What's Jackson Hole got to do with this?
No, I just my emails lighten up today with people wishing they were going to Jackson Hole. I'm like, it's really romantic.
No, don't wish that.
Yeah.
Nice.
What do you think? 42 degrees Friday morning.
Potentially, yeah. Check the weather.
Yeah, check that out.
Low 50s maybe.
With
yeah.
potential rain.
And then it starts to climb. No rain.
Really? I
Sunny.
saw a couple of potential
Oh, I didn't
raindrops.
see that.
Yeah,
We're looking
yeah.
at a different forecast.
I think it changes every 3 minutes.
Okay.
It's the mountains.
Ah, all right. If you're just tuning in,
Ramon
welcome
knows.
to the weather forecast and the price action as well. Equities right now positive by 0.16%. Coming up a little bit later in the next hour, Steve Rasciuto, chief economist for Mizuho Securities, Tom, on this economy going into Jackson Hole Friday.
Really important conversation. He is exquisite at the dynamics of the core GDP function. He's somebody where at the Fed they will really listen to what Rasciuto combined with Dominic Constam, what they think about the dynamics of the system. Rasciuto on GDP and Dominic doing all the different interest rate and the geometry of it.
That'll be fun. And then the She no-show with Damien Sasson of Bloomberg Intelligence. We were expecting a speech at this BRICS summit, Tom. Didn't get one. The economy's in a little bit of a tough spot. Been some suspicion about what's going on in the equity market over there, Lisa.
Here's one comment about that no-show. It's clear that Xi Jinping places a higher priority on political issues, security issues, than he does on business and the economy, which raises a question of, will they come in with the policy support if they're more concerned about other considerations? I mean, that's been one of the underpinnings of this whole weakness and the market response.
Without a doubt, Tom. Are we going to get that big policy shift? Right now, no big sign that we are.
No.
And a loss of faith, I think. A loss of faith from the international investor around the policymaker in China over the last couple of years.
Well, huge. And you see it with the devaluation of renminbi. It's tangible. Can you imagine if it continues?
Equities just about positive stateside on the S&P 500. Live from New York. Good morning.
I think the 2-year back at basically 5%. I think that's the pain trade for a lot of the banks. At what point does the economy effectively break under the weight of real rates? I don't think we're quite there yet at 4.3%. I still think that the market's ignoring a lot of this interest rate pass-through at their own peril.
I love that I say shots, Tom, and you just think of booze.
Diageo.
Kennedy Goldberg.
That's where I'd go. I mean,
Head
maybe
of US
somebody's
race
got a better
strategy
idea.
over at TD Securities. Shots, booze, not medication. It's a big difference there, Tom.
Some people consider it so.
Yes. So, Tom, that is medication. Futures right now on the S&P, just about positive, but fading. We're positive here by 0.1% on the S&P 500. Yields are lower by 6 basis points, 426. There's so much going on a single name basis in retail right now. Foot Locker to stand out this morning, just absolutely hammered. In the pre-market, we're negative here by 32% in early trading, Tom, as they cut their outlook going through the end of 2023.
They cut the outlook, but it's also the way of doing business. I noticed Amazon, you know, with the cloud and all that, not down nearly as much as traditional retail. And I think Lisa's dead on. This is much more than just sell-side income statement chit-chat.
It goes beyond Foot Locker, Elisa, that's for sure.
And we've seen that with Nike, and that's related to what we've seen overseas, but also Dick's Sporting Goods. Is this going to be just simply the weakest players getting punched out of the woods, getting punched out of the water at a time of higher rates? Is there something broader? Is there something that's going to be a more persistent trend? And at what point does that get people nervous versus who's gone into a Foot Locker anytime recently anyway? And does anyone use their Peloton? I mean, these are sort of the questions that people are going to be asking.
I'm not sure we're the
morning.
target audience, okay? I'm not sure we are. I'm not sure how often you and I go to Foot Locker is a decent indication of business
I have gone
at that company.
with my kids who want to get, you know, Air Force.
Yeah, okay.
Jordans
That's
and all
different.
That.
All right.
Although they're often like sold out. Like it's not even good customer service. That's part of the problem.
Oh, right. You let them know. You want to tell them now?
I'm good. They're
Okay.
having enough trouble this
We did
morning.
airlines
Best
yesterday,
of luck.
Tom. We did airlines yesterday. Some of the customer service. So the gate, I find, it's not on the plane. On the plane, I think they're fantastic.
The gates are a disaster.
At the gate, why are they so rude at the gate?
Because people are just awful. Because they're basically forced to lump together.
I think they're
and
worse
have
in
you seen
London.
this? Like the sense of like again, we talked about this yesterday. Everyone rushes to get on so they can get their overhead suitcases,
needless.
and then all of a sudden everyone's pushing and shoving, and it's like food fight.
Like Ryanair in the early 2000s.
100%.
I had a pilot.
Brutal.
I had a pilot tell me it's not funny. The pilots are not amused by all the luggage going on and all that. I mean, I don't know.
But why is the customer service on a plane decent, but at the gate they're just rude to you?
I do not know.
What's that
why.
about? I just don't get
to
it.
me, it's as bad in London. I find in London it's just as sketchy.
What, we're ruder in the UK?
Zurich's great. Zurich is like a Swiss watch. They run it beautifully.
You think they're polite in Switzerland?
Yeah.
That's a new one.
You know, what's amazing...
Not my experience.
Damien
but okay.
Cesar's agent just looked over at me and he says, "Can you get to Damien?"
No,
You know.
no. I love talking about TSA pre-check.
Okay, well, Damien Cesar here in pre-check. Chief of
TSA
Richard.
pre-check line. Everyone's got it now, Damien. The line is like back out the terminal.
I just got it a few months ago. It's fantastic. I mean, I've never had it before.
Everybody's
I was
getting-
the one in the 7 queues just to the gate.
They're getting clear now.
so they can
Have
be
you seen
mean
that?
to me.
Clear. They're getting clear now.
I do clear.
You do clear?
Yeah, it's
How's that working out for you?
It's sketchy. I mean, they go my knee.
It's another good review for a company today. Sketchy.
I put my eyes, John. I put my eyes into the thing, and they go, "We'll have to do that again, sir."
Let's hope that's not a public company. Sketchy.
I'll be using it today. You know, look, what's this Francine has the Gulfstream? That's what I don't get.
Outrageous.
2 years in a row. Damien Cesar with us right now. I have to tear your eyes from this is really the way to do it. Damien, I want you to talk to the fancy people we will talk to at Jackson Hole. Adam Posen of the Peterson Institute scheduled the iconic Barry Eichengreen of Berkeley. They're removed from your world. What will you, as a sophisticated markets guy, say to the international relations and international economics crew at Jackson Hole?
Yeah, no, I mean, okay, I'll tell you my honest answer. My honest answer is we're moving into a multipolar world where countries are being forced to take, a side between China and the U.S. And in that environment, should those countries that can actually remain neutral command a premium from investors? So that's the big question I would have. That's the serious answer. The other answer I'd be saying is, why do we even care? Because it's all about Christine Lagarde after those PMI figures. I mean, let's get clear. Bruce Kasman called it last week. He said, forget about Powell. He's going to have 3 pages or less. This is going to be about Lagarde after the PMI. And I think he's probably right here after what we've just seen.
We'll build on that. How does Lagarde respond to how weak the data is in Europe right now?
I mean, well, I can tell you what investors are doing. They're trying to pinch strikes and short sterling, and then Euribor secondly. I mean, look, that's really kind of where I see the market going here. This is all about a set pause and whether or not that's the top of rates. I mean, I'm an EM guy. I'm not a Euro short sterling specialist, but I used to trade those contracts, and I know what the market's doing
They
right
have
now.
Euribor, there's Shibor, there's Libor. There's like 47 Libors.
It's a world tour, if you like.
Shibor, Euribor.
Well, whatever bore you have, there is a question around how high it is and what that's doing to the economy. We were just speaking with Terry Wiseman about this idea that on one hand, in Europe, the weakness is coming from China, and on one hand, it's coming from higher rates, and that really transmitting into the economy. You put those two things together, doesn't that pressure the EM complex in a major way that has been sort of somewhat priced in, but not discussed to the degree that maybe it should?
Interesting. I mean, I don't know if I completely agree with that. I mean, definitely, if if you just look at interest rate differentials, Euro-US should be trading at 105. And what are we at, 108 now? So, there's weakness there. Certainly, if China's PBOC isn't managing the currency, you probably see it at 740. That's where B of A has it. I think that's where JPM has it. It could go far higher than that. But at the end of the day, you're right. The path of least resistance is dollar higher, stronger dollar. I said that, to you guys on Monday, and I genuinely believe it. Now, for emerging markets and from a foreign investment perspective, let's look at China. China's had over the last, 2 weeks, $10.7 billion of withdrawals out of their equity market. By comparison, since 2014, emerging market local debt on a net basis has seen $50 billion removed from it. That's since 2014. And in, 2 weeks, not even, we've seen $11 billion sucked out of the Chinese equity market. So, look, foreigners are supposed to be only 4% of that market now. But, I guess at this point, positioning so light, maybe you could just see a little bit to move it. I don't know, maybe. Is China zero in your portfolios? Probably. Should it be there? I don't know. It remains to be seen.
To our portfolios, and I just, as an aside, I wanted to talk to you after the show about that investment I did in the 97-year Austrian zero coupon bond, going from 80 or 90 somethings where I closed a trade with Mr. Sassauer, now enjoying a price of 90 to 5 or whatever, total bombshell. Where's the opportunity right now?
Well, century bonds are interesting now, right? If you're a believer in duration, you think that rates have peaked, right? And it's not just Austria, it's I think Petrobras has a century bond.
Yeah, I'm asking, where's the pop if you get the rate right?
Look, I think, it's got to be treasuries. You're
going to go back to U.S. full faith?
I think real yields in the U.S. are sufficiently adequate. So you're sufficiently compensated for the risks you're taking there, which means not that much in this environment of uncertainty. So, I like treasuries here. I like the fact that you're clipping 2% 10-year real yields. You take what the market gives you, and I think the dollar, has the wind at its back right now. So, for me, that's kind of the play. But, forget about that. Let's talk a little bit more about emerging markets, some of the things that Terry and you were just talking about, like Argentina and how no one cares. I care. The reason I care is because this is the IMF. This is the multilateral finance institution for emerging markets. And if they kind of show that they can't support, one of their biggest constituents, that's a real problem, I think, for all these other countries out there. So, I care about that. We've had elections, we mentioned in Ecuador, we've got a runoff in Guatemala, Argentina coming up. And, these are all important, touch points that we have to focus on.
Why should the IMF be concerned about what's happening in Argentina?
$7.5 billion disbursement that's going to be approved today, probably. At least that's what Sergio Massa, the finance minister of Argentina, believes. And then another, $2.75 billion scheduled for November after the election, maybe?
Is that our money?
$10 billion.
Whose money is that?
Oh, it's a long answer.
SDRs,
we're going to talk about, drawing rights and all that stuff. Yeah, a lot of it is the U.S., but it's other developed market economies. It's Japan. It's the Eurozone. Everybody's kind of behind the IMF. It's not just any one party.
Do we want that body to decide political outcomes?
Well, what's the option?
I don't know the answer to that.
China, bilateral institutions who basically have different agendas. I think the IMF has done an adequate job. I wouldn't say a great job, but certainly knowing there's a backstop there for countries in crisis and in times of need is a really important thing. And I think that's how a lot of financial assets in my neck of the woods are priced.
Bloomberg Business is Sports. Speaking of options, the Yankees, even back to my youth, have never been like this. Doug Cass is medicated down in Florida. He thinks Jim Palmer should come in. The great Jim Palmer should come in and be the new manager. Are they going to blow up the Yankees this year?
Forget about the manager. I've got 2 words for you. Theo Epstein. Theo Epstein, his 2 boys are now grown. He's living up in Greenwich, Connecticut. We need to bring Theo Epstein down to the Bronx.
Give him the Red Sox love.
Give him the Red Sox love, exactly. Luciano, we got to, draw back all that. And, maybe we need to start over. Look, Aaron Boone is obviously on notice. I think Hal's going to try and make his mark. But, yeah, the Yanks don't look good. Hard knocks. Aaron Rodgers tonight. That's what we need to be focused on, the New York Jets.
You're going to watch the debate of the Jets?
What debate?
Damien, good to see you. Damien Sassower of Bloomberg Intelligence. Tom, I can confirm that Clear is a public company, if you'd like to explain.
Yes. Yeah. I'm a member of Clear. I love it. I think
okay.
Clear is absolutely...
Not sketchy anymore.
Let me be clear about Clear. I love Clear. I use them. I stare at a thing. I go like this.
I see the small print running across the screen. This is not investment advice. This is not investment advice.
I don't think the Fed is done. I think we're in a higher rate for longer regime.
The inflation, the uncertainty about the Fed, the resilience of the U.S. economy, that's left us in a very different place.
Everyone would rather wait to see if something is going to come to fruition. And that's exactly what you're seeing this week.
The consumer has money. The consumer has jobs, so they're willing to spend.
There's a lot of money that's going to be getting sucked out of the system, and I think it's ongoing right now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on our way to Wyoming, on radio, on television from New York this morning. We prepare for Chairman Powell's speech and Jackson Hole. It's going to be an interesting hour on this as well. John, I just think we got to do a data check here. And the per capita income in Jackson Hole, Jackson Hole, $318,297 is the per person per body income in Jackson Hole. 69, sort of like the surveillance team, 69% of income comes from investments. This is a fantasy land we're flying out to.
Things are pretty good if you've got loads of money. For other people right now, not so much. So we can talk about a couple of names. We've had some warnings in the last week from retail. Foot Locker this morning, cutting the outlook, the stock getting hammered. Same thing from Dick's Sporting Goods in the last 24 hours. Some warnings from Macy's about delinquencies. Lisa talking about that. Last week, student loan repayments are going to restart later on this year. And apparently, according to Walmart and Target, Tom, that's going to hurt. This Friday for Chairman Powell is about the tension between the progress they've made on inflation. And they have made some progress.
Yes.
But the fact that mission is not complete, because at the moment, this economy has been far more resilient than they thought it would be. It's the tension between those two things and whether they need to go further or maintain rates higher for longer that we'll all be focused on.
But to me, the heart of the matter, and I think Powell's actually been pretty good about the social aspect of the dialogue, is the haves and the have-nots. We are going to Happy Land, the absolute ground zero of the wealthy in America. And we have to witness the retail numbers you're talking about. Lisa, I'm sorry, half of America's flat on its back with a 5% GDP statistic.
I take your point, which is the reason why it really stood out to me that the former St. Louis Fed president, Jim Bullard, said this in a Wall Street Journal article. I think it's turning out that the Fed's policy has been very successful, and I think that will be the buzz at Jackson Hole. He went on to say he doesn't think this is necessarily going to be reflected in the speeches. It's not a very good look to say victory, but at the same time, that's going to be the scuttlebutt. This, to me, is a question. Is it too soon? And this is what everyone keeps talking about, the long and variable lags, which we laugh about, because how long, how variable, what does this mean?
Super long.
Super long or super short, whatever you want to call it. Whatever you want to say, it is clear that rates are not transmitting to the U.S. economy as quickly as people had previously thought. And so it raises a question, will they ever? And then what does that look like?
Okay, I've got in my briefcase my book of the summer, Olivier Blanchard's monograph on our start. It's on, where are we going to settle out? John, what are we going to hear at Jackson Hole about the new 2.0%? I think we're going to hear a lot about it.
The new long dot, high neutral rate.
Yeah.
John Williams, the former New York Fed president, poured some cold water over that, Tom. And I think to Chairman Powell to come out this Friday and maybe separate himself from New York Fed President John Williams would be a pretty big ask, wouldn't it?
Yes.
It would be a big ask. Yeah. So let's see. Let's wait and see if we hear anything on that. I think in the last 24 hours, to some extent, relatively speaking to where we were a week ago, much bigger attention now on President Lagarde of the ECB this coming Friday, off the back of some pretty dreadful data out of Europe, off the back of a weaker China. And Tom, if we took the US economy out of it, let's take the US economy out of it. It's pretty robust, resilient, all of that stuff. Take it out of it. Just focus on China. China at the moment, not great. Policymakers struggling to respond to it. Europe, sub 50 PMIs, basically in contraction. And inflation's still a problem, even with that. Things are much, much harder.
Yeah. I'm going to go where you were 2 hours ago, John. The euro, we're on the 107 handle. Watch 108.12 on a weak euro.
Yeah, and potentially 105, according to Nomura's Jordan Rochester. He seems to have more confidence, though, Tom, in a weaker pound story. The pound at the moment, 126.29. He's looking for 122. So $1 stronger here. Bond market rallying, taking some of that yield back. TK, we're down 5 basis points, 427.26. And equities just about positive by 0.2%.
Just had a wonderful feeling. Lisa Shallot to take over for James Gorman, I think it would work.
Lisa Shallot
I'm sorry, I think it would work. The Chief Investment Officer at Morgan Stanley Wealth Management joins us right now. Your worst nightmare, Ms. Shallot, no question about that. Tell me what you're hearing from Morgan Stanley investors. I don't want to know about, the research department or what banking's doing, the land of Gorman. What are you hearing from your customers?
Yeah, so this is really interesting, Tom. You know, our clients have been, quite frankly, pretty willing to watch the quote unquote sideshow of markets this year and take advantage of what, for many of them, are the best fixed income yields in 10 to 15 years. And with so many things and so many cross currents that, quite frankly, don't hew to traditional or recent models of how Fed tightening works, a lot of this has been viewed by our clients from the sidelines as they clip coupons.
Lisa, the real yield is up at a level which most adults that we talked to said it would never get to. Do you change your portfolio allocation with a 10-year real yield touching 2%, now 1.92%?
Now, our advice has certainly been to do that. We believe real yields at these levels make fixed income particularly attractive, and the stock market is still not fully processing the reality that these real rates at these levels, if they persist and they prove not to be a momentary dislocation of liquidity in markets, if they are truly emblematic, as you mentioned earlier, of a potentially higher R star or a Fed that is exceedingly patient, that has major implications for the valuation of long duration growth stocks. And this is one of the conversations that we're having with folks. It's kind of, Finance 101, reminding them that the discount rates matter when you're thinking about the cash flows, even of the Magnificent Seven.
Lisa, there's one thing to talk about clipping coupons at a time where growth is decelerating. It's another when just looking at the GDP Now forecast from the Atlanta Fed, as Tom was mentioning earlier, it's nearly 5.8%. It's reaccelerating. And you can say hocus pocus, and there are all sorts of other things that it's not accounting for yet, et cetera. Still, there has been this incredible growth, which goes against the normal thought that there will be a slowdown as a result of these high yields. How do you explain that to clients and say, no, this reacceleration can't last? No, look beneath the hood. What are you pointing to really show that it's not sustainable?
Well, I think we're trying to talk a lot about the extent to which this has been a combination of balance sheet resilience combined with excess savings across the private sector, both for corporates and for households, and really just doing the math and saying, look, at a certain point, that excess savings that was delivered to the household sector at the peak of COVID, which approximated $2 trillion, is now down by our best guesses to something around $375 billion is left. Again, not saying that that's nothing, but it is attriting. And that you put that together with some of the other factors here, as have been discussed, whether it's higher oil prices, the demands of student loan payments, et cetera, and the consumer will start to face headwinds in our humble opinion. On the other side of the ledger, for corporates, certainly the sum of the refi wall on some of this corporate debt, we believe is going to start to show itself in 2024, and you're going to start to get some of these cracks in the credit markets, alerting people to the cost of capital, and that maybe the capital spending boom that we've seen begins to slow a bit as that interest rate sensitivity does finally kick in over the next 12 months.
How surprised have you been? How frustrated have you been, Lisa, that the thesis hasn't really played out this year?
Extraordinarily so. Look, I think that we tend to model things in two dimensions. One are our economic models, and secondly, our market models. And what's been pretty extraordinary is both types of models are failing in the current environment. The macroeconomic models, things like, indices of leading economic indicators, some of the manufacturing PMI-oriented data that historically have pointed pointed to material deterioration in corporate profits has not really played out. On the market side, things like the real rate, which typically is inversely correlated with stock prices, has just not had the efficacy. We've seen, price earnings multiples really expand in the face of rising real rates. That's not a typical correlation. So this has been an extraordinary year. If you tend to be pretty, data and framework driven in your recommendations, as our team historically has been. Now, that doesn't excuse, trying to do the homework for, what we missed. And as, we've tried to talk about, we really missed the extent to which this interest rate insensitivity would persist, and the extent to which household balance sheets and corporate balance sheets have thus far been immunized. Their spending patterns have been immunized from these higher interest rates.
Lisa, you weren't alone, that's for sure. Lisa Shallett of Morgan Stanley. Lisa, thank you for the update. The update there from Morgan Stanley Investment Management. TK, hasn't that been the story? One person's complacency, another person's resilience. Which one is it?
Which one is it? I think Anastasia Amoroso nailed it. Is you got to look at the three accounting statements rather, and the key attribute here, given Lisa Shallett's discussion of real rate dynamics, is leverage, 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 leverage. That's the first. You go to WACC, John. I don't know if you knew this. It's a terminal function, weighted average cost of capital. Informative. You want to own things now with a lot of debt, like. Look at Hollywood and entertainment, just as one example. That's where Amoroso was coming on this.
Is he great refinancing that never was, but might be next year? If you're just tuning in, welcome to the program. The S&P 500 positive here by 0.2%. Coming up in about 18 minutes from now, Steve Rasciuto of Mizuho Securities looking ahead to Chairman Powell in Jackson Hole, Wyoming on Friday. Before we get there, after the close, we will have numbers from Nvidia. Looking ahead to all of that, Jim Karen of Morgan Stanley in the next hour on Bloomberg TV, alongside David Leibovitz of JP Morgan, Nadia Lovell of UBS. And we'll ask that question at the very top of the hour. Complacency, Elisa, or resilience?
It's the two sides of the same coin, at least. Where are we in this moment? It always looks like a soft landing when it is about to turn into a hard landing. That's what we were hearing from JP Morgan earlier this week. At a certain point, though, what data are we tracking? And this is my frustration with data dependency. I know you share this. At a certain level, are they going to try to declare victory in Jackson Hole, even just on the margins, not in the speeches, because it's a bad look? But, or are they going to really say, hold on a second, there's something else going on here. Take a look at Foot Locker. This is concerning to us. Are they going to be paying attention to that?
There's a data point this morning for you. I think relative to last year, they're in a much better place.
Yes.
And they deserve to feel much better about the situation. Whether they declare victory, TK, that's a stretch at this point, going into September.
It's not. There's a humility to Jackson Hole. Seriously, folks, we make jokes about it, but there's some serious academics going on here. In debate, it really gets heated. They really get going in the meeting. McKee's in the meeting. They won't let me in. I tried to sneak in once when I wore a bear costume. Tried to sneak in one year, didn't get in. And Bowder went mental. Willem Bowder at Citigroup went absolutely mental.
Because you were in a bear suit?
Because you
get in? That was part of it, but they won't let me in.
Why did William go nuts?
I can't remember what the paper was, but they really get going on this. There's serious debates here. To me, it's over our start. It's like, where do they set?
This is really selling it
5
to the
years
people.
out, 10 years. I am. I'm selling
what a promo.
I'm going fishing.
You're going fishing.
No, you're
Matt Lloyd, Western River Anglers. I'm going fishing.
Let's get a video of that. All right.
It is a weaker China that we've seen. And of course, Europe is more exposed to China than the US. So definitely part of the slowdown picture. And I would say generally a theme of divergence of the US versus the rest of the world. I think what we're seeing in Europe is the impact of tight monetary policy. The transmission has been much faster or more powerful than in the US.
Virginia Maisonneuve at Allianz and with massive Pacific Rim cred. She was really quite good about the synthesis of China into all north and, of course, down south to Australia on the Pacific Rim and the oddities, the confusion right now that we see there. Here at 8:17 a.m., we're doing a number of things. We're looking at really ugly retail America. We're looking at some difficult European numbers. We're on watch for 107 euro, 108.08, 1.0808 weaker euro today. We have our eyes on India, which was a non-story until X number of days ago when a Russian space probe crashed on the moon. Don't know much about that, but what we do know is India now will make the go. I believe we've got an image on radio. It is a textbook image of what you see in a control room, and this in India, as we are 20 minutes away from that. Lisa Abramowicz, our satellite expert, will bring us expert coverage on this.
We're all looking forward to that, including me.
We're looking forward to this, and it's some wonderful history here because they look to the far side of the moon. Lisa, it's good to talk to Henrietta. Why don't you bring her in because she's expert on the far side of the Capitol.
All right, well, fine. Let's start there. Henrietta Trey's Director of Economic Policy Research at Veda Partners, and we've been talking all day about the debate that happens at 9 p.m. Eastern of the Republican primary candidates. But there is a larger question right now at a time where we are hearing about Gina Raimondo going to China and a question of the rearranging of the global sphere. And I'm just wondering, from all of the rhetoric that we've heard over the past 24 hours, really criticizing China by the U.S. about the lack of transparency, et cetera, is there a clear message right now coming from the U.S. administration on exactly what they want this relationship to look like?
I think the message is getting starker. And while the Biden administration is doing its level best to have these cabinet level secretaries be going over to China throughout this year and maintain that there is a dialogue happening at a high level that would prevent, a trade war from escalating into something more aggressive, you are simultaneously now starting to see the Republican presidential candidates enter the fray on the China discussion more aggressively. And I think it has to be said, former President Trump yesterday having that bombshell report in the news that he is reconsidering and plans to repropose what was a 2016 idea of a border adjustment tax that effectively says anything coming in from China gets taxed with a 10-20% tariff rate, which is effectively a tax on durable goods. Big box retailers end up going sort of ballistic whenever this gets proposed, as they did in 2016. But it's a $1 trillion revenue raiser that when we deal with tax reform in 2025 is going to have to come up. So I think the Biden administration's approach to China is already being influenced and is going to be wrapped into the Republican presidential candidates' plans, which is to be very aggressive towards China and indeed the rest of the world. The border adjustment tax is not just facing China, but any nation that does trade with the United States.
Just building on that, this idea that the party line is to be as aggressive as you can on China. We are expecting to hear that from the candidates tonight at the Republican primary debate. What is the distinction between candidates? Is it sort of hard and harder in terms of the lines that they want to draw? What are some of the contours of where they're going to draw distinction from the other candidates?
On the trade front, I think there's nowhere to go but more aggressive. Domestic onshoring, imposition of tariffs, anti-China sentiment in the United States is at its highest that we've ever documented, according to Gallup polling. The only groups that are from the sort of traditional Republican platform, which used to believe in something called free trade and is now something called fair trade, which apparently requires tariffs to even out the uneven playing field that the Republican candidates see, there's really no limit to how aggressive you can get on China. And I would not want to be the Republican candidate saying, hey, maybe trade with China is a good idea. They'll just get pilloried by anyone who's polling higher than them, including Trump.
Henry, I don't have this as direct news, but I think it's anecdote with imagery that in some form, 5 drones took out 5 major jets, bombers, whatever, of Russia overnight. That brings an immediacy and imagery of this war in Ukraine, whatever the news may end up being. How do they address a war in Ukraine, which I would suggest does not engage the American audience?
The Republican Party in particular is specifically bifurcated on this issue. There are some candidates, I'm sorry, not really candidates, but there are some Republicans in mostly the United States Senate. I would say Mitch McConnell is the most preeminent actor there, who are strong advocates for continued aid to Ukraine. They will take the White House's $10 billion supplemental emergency request for Ukraine and probably plus it up to 15 or so, as we've seen them do in the past. But then you have the presidential candidates who are pretty split. Ramaswamy, I would say, is probably the leading candidate, along with President Trump, who would say, maybe let's question whether or not this is a situation we need to be engaged in at all. We're more worried about federal spending. Let's strip this out of any supplemental request.
Okay, but I made a joke earlier about the far side of the Capitol as we wait for India coverage here in a number of minutes as they attempt to land a craft on the moon. Henrietta, let's try to land a craft in Congress right now, and that's the culture war. Is this debate about the economy stupid, or is it about culture stupid in America?
It's really unbelievable. I was just thinking about this yesterday. Then Majority Leader Mitch McConnell gave Republicans the biggest Christmas present I've ever could have imagined. Trillions of dollars in tax cuts that expire the year after the president is elected, the next president. This campaign should be exclusively about tax policy, federal interest rate policy, all the individual tax brackets expiring. And you can't even see the Christmas present because Donald Trump and abortion are blocking out the entire tree, let alone that present. So I think that in a alternate universe, Republicans are talking exclusively about tax policy and economic policy right now, which would be a boon to them going into an inflationary environment where President Biden has struggled to get his Biden economics message across. And instead, we're talking about abortion because it's on every docket, particularly across the South, next in Virginia.
And this raises a question about what the gravity is going to be after today and how much it's going to pull away from just a shrug of the shoulders and a suggestion that President Biden will get reelected. How much concern is there in the Democratic Party about really galvanizing that campaign at a time where donations are flagging and a lot of enthusiasm is as well?
I mean, all you need to do is look at the turnout we've seen in Ohio and Kansas, and we will see, I suspect, in Virginia in November, and again in Ohio in November. The voters are flocking to the polls when it actually counts. I heard an incredible note. It's basically, people will say that the economy is their number one issue, but then they go to pull the lever in the voting booth and they say, oh, I vote for this guy because of his position on abortion. I think that's what you're seeing in the middle of August, and that's got staying power.
Henrietta Trace, please watch the debates because I'm going to be with Damian Sassower watching the New York Jets. Henrietta Trace, thank you so much, with Veda Partners. Lisa, there is Eli Lilly of Indiana. I can't explain the pharmaceutical expert of the troops from Indianapolis. In years before that, literally the cash founders of Washington University of St. Louis was Mallinckrodt. This is one of America's venerable names in pharmaceuticals until I'm going to just quickly eyeball 15 years ago where this company blew up with opioids. And that's what this is about. Mallinckrodt of St. Louis, in one of the 47 spinoffs from Tyco and Covidien, declares a second bankruptcy this morning. They did so 3 years ago. I don't know the particulars on this other than to say, Lisa, it's one of the great venerable names of pharmaceutical science in America, buried within all the debate and litigation of opioids.
Yeah, they're paying their final payment of $250 million to the opioid trust, and in the process, wiping out a bunch of their debt in this bankruptcy.
Coming up, Michael McKee. This is Bloomberg. Bloomberg surveillance. We'll get it right. Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. We're on our way to Jackson Hole here in a number of hours. John Ferro preparing for the 9 o'clock hour. We have so much going on. Stephen Rasciuto will join us in Mizzou. This is a critical review of the American economy. We're going to go out and see Wonder Boy waking up at the Pioneer Grill in Jackson Hole. That would be Michael McKee leading our coverage. And also we have a landing of a spacecraft in India right now. Lisa, give me the image, please, of Mr. Modi here, I believe, going to talk. And we're a little bit vague on here. There's a count up clock. as they descend. And what's amazing here, Lisa, is this is to the south, where we did not go with Apollo 11.
And you put it really well earlier that we wouldn't be talking about this as much if the Russian lunar landing on the South Pole a couple days ago didn't pan out. They crashed, and this one is slated to be the very first to land here. What's interesting to me is this comes at a time where India is really ascendant and is sort of throwing around its heft as an independent player at a time of a bipolar or multipolar geopolitical world. And you see that taking place with this question of are they going to go with Russia and China, or are they going to move to the West? Are they going to remain independent? For them to be displaying this kind of space-related kind of exploration highlights their preeminence in the new way.
And to set this apart, folks, with the history here of there's water in the bottom of the moon. We learned this from Ranger-like spacecraft that crashed into the moon. And so now, like China, like America, we're trying to land on the far side of the moon. And for those of us in our youth, this was a huge deal. Lisa, this goes back to October of 1959, which is frankly 2 years after Sputnik. And it was maybe even more amazing than Sputnik. The Soviets were on the far side of the moon, and we weren't. And that resounded through American aerospace science.
And Pink Floyd was on the dark side of the moon. There is a question going forward about whether, we do find water and the fight over that. And that has been something that people are looking for as well.
Yeah, it's just great, folks. This is when you get Chicago aerospace in there when we're quoting Pink Floyd.
Well, I mean, come on.
As the Indians got it done. We'll continue to follow India as they create some scientific history here right now. Creating history right now, Pioneer Grill open for 32 minutes out at Jackson Hole, which means Michael McKee, leading our coverage at Jackson Hole, is well fed as well. He greets us in the chill of Jackson Hole. Michael, I want to go to that moment that we'll all see where Powell, Ueda, newly minted at Japan, Broadbent in for Bailey, and of course Lagarde speaking as well. They're going to wander out and point to the scenery behind you. What are they going to be thinking about? What is the common ground of four central bankers as the Kansas City Fed meets to greet?
Well, I think there's two things, Tom. The first is they're going to look at these mountains behind me and they're going to say, wow, it's real. It is so beautiful. And then they're going to think about what are we going to do to keep inflation down in the three countries that have inflation problems, and what are we going to do to keep inflation up in Japan? Those are their main goals going forward. And while all of that does seem to be happening as the central bankers would like it to, they can't really explain all the reasons why. And so this conference may be able to provide some grounding for the central banks as they try to figure out what their moves in the coming years are going to be.
I looked, Mike McKee, at the niceties of this in the Kansas City Fed for our international audience as well. Can you explain the transfer of power at Kansas City? You and I were with Esther George last year in the grill with a baby puppy pivot, and now we have Schmid of Kansas City. Tell me about Schmid of Kansas City.
Well, he started, as the tradition at the Kansas City Fed seems to be, as a bank examiner, not at the Fed, but at the FDIC, but worked his way up in banking, ran a couple of banks, did a stint as CEO of Mutual of Omaha, so we will get Marlon Perkins out here to find us a moose, and then ended up running a family bank in Dallas. So he's got a banking background, same as Esther George and same as her predecessor, Tom Honig, so the bank stays consistent in that. As for his monetary policy, we have no idea at this point. He's only just started on Monday.
Michael McKee from the far side of the Tetons. And now we go to India and I believe a successful landing of their spacecraft searching for water at the bottom of the moon, very, very distant from the Sea of Tranquility that we saw, what is it, Lisa? Help me here, 50 years ago, 50 plus years ago. Moments ago, Lisa, Mr. Modi waving the India flag, a proud moment for Indian science.
And this really pushes forward exploration as the hunt for water in space is important. I can't help you with 50 years ago. I can tell you that this is going to be interestingly
See
going
that
forward.
shade I got, Rashida?
Well, I mean, honestly, you're like,
See
you can
that?
help me out there on the history
it's
of
every day.
exploration. I mean, come on. Really, you think that I'm going to just know? No, don't know everything.
We'll go from the youngster Bramo there, putting me in my place, to the elder. Constam's even a kid here, to you, with Dr. Constam holding court at Mizuho Securities, is Stephen Rasciuto, the U.S. chief economist. What's the common ground? I'm talking about common ground of four central bankers. Right now, what's the common ground of the brilliant Rasciuto Constam research at Mizuho? What do you both agree on?
Well, I mean, I think the answer is very, very simple, is that, there is a dynamic trade-off going on between the global political forces and the global deflation or disinflationary forces versus the cyclical local inflationary forces that several of the individual countries are experiencing. And it's this battle that's being reflected in the yield curve. The reason why long-term rates can't mount a sustained upward movement is everyone looks at it and says, okay, eventually the Fed's going to be successful at holding down inflation. So how far do we need to push? But by the same token, there's global deflationary forces out there that's pulling down long-term rates. At the front end of the curve, it's all about domestic cyclical inflation stories, and that's pushing the curve. So the curve is in this inverted standpoint. It's been here for over a year, and people keep on expecting the curve to shift back to a more normal position. And the reality is it's probably just not going to happen.
I'm talking on camera with smart people like S.A. Adam Posen, the Peterson Institute. I'm talking off camera with all the officials that don't want to talk to me on camera. Are they working out of the textbooks you used in school, or are they making it up at Jackson Hole internationally?
Well, they should be working out of the textbooks. They should be actually going back to the older textbooks, the Keynesian textbooks, because the reality is we learned from COVID that Keynesian economics was the right brand of economics, and we've gotten the response we expected from a Keynesian stimulus. And therefore, a lot of the Nouvelle discussion is should be put to the wayside. In fact, one of the things that worries the most that I hear from the Federal Reserve officials is this idea of as inflation comes down, real rates go up, and therefore the tightening gets greater. The reality is corporate CEOs do not make decisions on after-the-fact real interest rates. They make decisions based on what they expect nominal interest rates to be. And that nominal interest rate assumes an assumption for real returns and an inflation expectation. And if those nominal interest rates are rising, that's a bigger problem than them looking back and saying, oh, well, real rates were higher.
All right, let's put this all together and raise a question about the soft landing narrative that seems to now be the consensus on Wall Street. It seems as though this has become a commonplace idea, even though it's been elusive historically. I see you laughing. Are you seeing material cracks that challenge the idea of this that people are ignoring?
No, I don't see any material cracks right now, but I think the reality you have to understand is that any recessionary tendency will wind up being a hard landing. There are differences between crashes, credit crunches, and there are differences between recessions. And this is going to have to be an inflation recession. And that's the result. And that's not necessarily a soft landing. A soft landing is this vague concept where you bring the economy back to trend growth and inflation comes back in that direction as well. That's not going to happen with a labor market as tight as we have today. And it's going to be hard to get inflation to go from 4% to 2%, a lot harder than it was to go from 9 to 4.
So we're talking this morning about Foot Locker, about Dick's Sporting Goods, about some of the results in retailers that have struggled in the past and that are now seeing that kind of come to a fore. And we're raising a question, is this idiosyncratic stories of management structures and business models that have become less relevant, or is this something broader about consumer spending? From your view, not to go into the companies themselves, but what do you think it is?
No, there's a lot of idiosyncratic risk. I mean, keep in mind how long the expansion was prior to the COVID meltdown, and then the nature of the COVID restructuring and the rebalancing or the reacceleration really has papered over a lot of problems for a very long period of time. And they all have to come home to roost. And this is the idea that a recession is somewhat therapeutic if it's not a credit crunch. And we kind of need that in this environment.
You are acclaimed, and I'm going to go to Olivia Blanchard's study of our start and where we are. And the one phrase that permeates, and this is the humility of Blanchard's work, is other factors. He says there's things out there we don't know. You own the high ground on this. What are the other factors that make this R-starred certitude a mystery?
The real issue is when you look at balance sheets, which we don't do a lot of. We don't look at balance sheets and try to assess where we are. We look at things like financial stress measures, which, to be honest with you, we play games with because they're statistically created out of indices that we see published in markets. The reality is when you get to look at the underlying balance sheets of companies and you look at them at a macro level, balance sheets are extraordinarily healthy. And this is why when you looked at Silicon Valley and so forth, you could actually back away from that having been a credit crunch because the underlying balance sheet of the banking industry was very healthy.
Just to sort of pull this all together, what is an inflationary recession? What is an inflation recession, which you just said?
Well, the difference between an inflation recession and a credit recession is basically the interest rate increases and the inversion of the curve slow the economy to bring down inflation. In a credit crunch, what happens is the inverted curve causes a credit crunch that then causes a recession. So the Federal Reserve has to slow the economy. You can't get the economy to slow and get inflation to come down to target unless you're going to create an excess in the labor market or some excess in the labor market. That's what they have to accomplish. You can only do that by having GDP contract. That's a recession. The reality from a credit crunch standpoint is the credit crunch causes the recession. And that's what 1990 was. That was what 2000 was. That was 2007 was. And the reality is that's what COVID was, because COVID was a massive corporate balance sheet problem and household balance sheet problem. And that's why they required subsidy levels of interest rates.
Steve Risciuto, thank you so much with Mizuho. A lot of breaking news going on right now. We have a correction. This is on Mallinckrodt, and it's a subtle correction because there's loads of headlines out about their restructuring and bankruptcy over 3 years. But to be clear here, Lisa, they have not filed for bankruptcy. They have a scheduled filing for bankruptcy in the coming days.
We're clarifying some of the timing as they try to figure this out and work through this excess from the legal settlements and just how much they had to pay.
Some confusion over my inept coverage of the landing of the Indian spacecraft to the south of the moon. It's not like Ranger where it crashes in. This is a landing, like I'll say a lunar module that we remember from Apollo. But then the idea is to have a rover, which I believe is 60 pounds. It's like a teensweens rover going down. I guess it goes down the ramp like in, like a Disney movie. It goes down the ramp and then it goes out on the surface and looks for water.
I'm actually really excited about this, but I love science fiction. I'm revealing way too much.
This is not fiction. This is like reality.
I know. It's so cool. And water is where life is, and that's the potential exploration. Although I imagine there's some other reasons.
They're in my ear. Enough of the Bill Nye the Science Guy stuff. Do a data check. The VIX 17.00. Standard & Poor's up 0.1%.
I like Bill Nye the Science Guy. You could keep going.
I got my Bill Nye bow tie.
Oh, you should wear it more often.
It's in there.
Totally
I got
a fan.
470 bow ties in the closet.
Complete fan.
It's a walk-in closet. And in the answer, there's my Bill Nye. He gave it to me.
But you have a walk-in bow tie closet?
I have a walk-in bow tie closet.
And do you have like sport bow ties?
No, I have three, and then this is we'll see Lagarde out in Jackson Hole, and there's 3 big hooks that hold about 100 of the bow ties, and one on this side is gifts. Wonderful, generous people. I got one from Constant, but not Risciuto. I don't know what that's about. And there's another side, which is stuff that's like from the family, which I've never worn.
Yeah.
And then there's in the middle the Hermes bow ties, because I wear Hermes bow ties.
How do you choose? Is it sort of like roulette? Do you have a big wheel?
You choose at 3 a.m. It's in the dark, and you just pick one.
Oh.
What am I wearing today? I don't even know.
A lovely sort of very thin plaid bow tie.
Oh, yeah.
Fabulous.
This is I need tenure bow tie. You wear this when you need tenure.
So this is our retail conversation of the day as we focus on potential issues in the retailers. But this is sort of the question, I mean, are we seeing people, not buy bow ties as much?
Well, you mentioned, Hermes and something fancy like that. It is about this huge bifurcation in society. That'll be the theme of Jackson Hole. Michael McKee out front, setting up with our team for our complete coverage. Ruart, there's a shot, and I see Joe Weisenthal and Tracy Alloway. They're halfway up the coal right now. Weisenthal's on oxygen.
Oh, that looks beautiful and cold. Kansas can't seem to hold on to the gains as the session grows older. We do see the S&P futures just dip just a touch as we assess whether the slowdown can. Oh, actually, now they are up a tenth of a percent. We're looking at a question around how much we can gain resilience at yields where they are. Yields trying to go lower and coming back as the session grows on. And frankly, we saw this yesterday too, Tom. Yesterday, we did see initially a bit of a bid into treasuries, and it completely faded by the end of the day. And I wonder if that's sort of the gravitational force right now in the bond market.
Yeah, but help me here. Are we Jackson Hole dependent or are we Nvidia dependent? I would suggest right now Nvidia is more important.
I think that right now the expectation is for Jay Powell to say absolutely nothing of import because he has no incentive to, and Nvidia actually will give us projections, which is the reason why. I do think it's important to look at some of the single name movers right now. I think it's important to take a look at the retail names that we've been talking about throughout the morning. We've been talking about Foot Locker. It's taking a disproportionate amount of airtime. People are saying, why do you care about Foot Locker? Everyone kind of wrote them off. But the fact that they cut earnings and their expectations for earnings so significantly after already seeing a deteriorating business outlook really has gotten people concerned. Those shares have lost about a third of their value so far in pre-market trading.
I did not realize that that's hammered.
It's a massive move, and we're talking about adjusted EPS expectations this year for the full year of $1.30 to $1.50 from $2 to $2.25. So significantly coming in, sales coming in, talking about theft. We've heard this from a number of retailers, including Dick's Sporting Goods. Is it just Foot Locker, or is it something bigger?
Paul LeJeus out moments ago at Citigroup. He's really wonderful. I hope I'm pronouncing that right. You know, I'm probably butchering it. Paul LeJeus with Abercrombie and Fitch, killing it. Against everybody else.
We're going to get
there. He calls it a blowout quarter.
We're going to get there. So that's the reason that people are wondering, is this idiosyncratic or not? Nike, before we get there, also poised for a 10th
What are you, all
straight
retail
loss.
today?
Yes, I'm all retail.
You're
because
all
we want
retail,
to know,
okay.
is it idiosyncratic or not? And that's the question, which is you pointed Abercrombie and Fitch. They are soaring after boosting full year outlook. And is this idiosyncratic? Because they did adjust some of their Hollister brand, their teen brand. I would say, you know, some people might buy it who aren't teens, but you know, there is this brand that they are reset and they're trying to take actions to recalibrate, and they did have some rocky periods earlier. How much is this a story by story, and how much can we draw conclusions at a time where you've said this, the gravity's coming onto Earth. The winners are going to win, the losers are going to lose.
Yeah, but the difference here on Fifth Avenue is my kids are lined up outside Uniqlo trying to, you know, get something, you know, that they saw in some fashion mag, you know, some foreign fashion mag. Your kids are lined up outside Abercrombie and Fitch. You got to refi the house to get out of Abercrombie and Fitch, right? It's expensive.
I don't know because my kids aren't lined up outside Abercrombie and Fitch, but I will say, you know, you have different price points. It's not exactly luxury. It's just that the winners can still win. I think that's the point, and why it's so difficult to come up with a narrative in this market, because you still are seeing discretionary spending for certain things and not for others.
And now he's Segui this morning towards Jackson Hole, where everything today is an angle on Jackson Hole. This will top them all. Long ago and far away, David Blanchflower of Dartmouth College and the Bank of England was out there. He went on a hike. Blanchflower got halfway up the damn mountain and couldn't get down. They had to go do a rescue effort. Mike McKee rescued Blanchflower off the cliff. Someone with knowledge of this is someone who's never been up the famed Dartmouth Skiway, legendary. This is what you do in the Dartmouth bubble. You go ski all winter. Ed Harrison with us here, Edward Harrison. Dartmouth, it was like religion. You had to have a certain beverage of your choice and go out to the skiway. You never really did it, but I mean, this used to be like religion, right?
Exactly, and I bucked the trend by being there for 4 winters and never once setting foot on the ski slopes.
That would be smart. Your parents end up at the Dartmouth Lodge there on the green as you're in the hospital with a broken leg. Let's talk about the broken leg of the American economy right now. Lisa's been going all day on this. Retail shows a grim consumer. What does Scott Landman and the team say in Washington?
Well, you know, I think that I'm thinking Anna Wong in particular, and she's saying that she's still looking for end of 2023, early 2024 recession, and we're seeing the incipient signs of some distress potentially there. I think the one thing to look at is GDP now, which is at 5.8%. The next version is coming out tomorrow. This is ahead of Jackson Hole. So it'll be interesting to see whether, with the surprises, the upside surprises that we're getting in the economic indicators, whether or not we start to roll off.
How important is it to you that we have seen bonds sell off into the close? This idea that, in general, you do have people who are interested in buying the dip, maybe at the beginning of the day, but by the end of the day, they're like, no, we're done. I mean, is that important to you?
Well, I think the question is the fundamentals versus the technicals, because the technicals, Ed Bolingbrook from my group, he has a post out today saying that we are short across the curve at every single maturity, both in the U.S. and in Europe. And so what that says is that the technical factors are moving us toward a higher rate. And so we have a short squeeze that's going on right now. So that's the technical of today. But the trend is higher, not only because of that positioning, but because the U.S. is outperforming relative to other countries.
Given that it's also August and a lot of people are just at the beach, which might be also part of the technical underpinnings of what's been going on, how focused are you on the 20-year auction today, which is coming at a time where there are these sort of new cycle highs for yields?
Yeah, the 20 trades very differently than a lot of the others because there's not as much liquidity in that. And so it'll be interesting to see what the uptake is, because what we saw, I believe, a week ago is that the 30, there wasn't as much demand, and that sort of set in motion this bid higher in yields. And so I think it'll be very interesting to see what happens with that particular auction.
How do you filter the core debate of whether this jargon are starred into the markets? Is there not a linkage or a one-to-one relationship, but then how do you synthesize Jackson Hole mumbo-jumbo into the real world of markets?
Well, Bill Dudley, I think he had a good piece out talking about R-star going higher. And, the way I'm thinking about it is in terms of the September SEP. So when we get the summary of economic projections, we've already seen the central tendency going up for the last dot. Maybe we see even more movement there. They've been at that level, 2.5%. If they go up beyond that with their mandate at 2%, that's telling you they're saying R-star is moving higher than 0.5%. Maybe they're going to be telling us they think R-star is now 0.7% instead of 0.5.
Played basketball recently?
No.
It's a threat to society. I always get hurt, and we got breaking news. And it's Ed. Thank you so much, Edward Harrison, with us today on the markets. What you mentioned there's 8 people on stage tonight.
There may now just be 7.
7.
Hearing.
This is Dana Bash over at CNN leading the coverage. Let me read it, Lisa. The North Dakota governor, Mr. Burgum, taken to a Milwaukee emergency room after suffering an injury while playing a game of pickup basketball with his staff. It is unclear whether he will attend tonight.
And so we will be reporting more about that. He was a long shot candidate. It wasn't as though he was one of the front runners, but still an important voice at a time where there are many, and we're looking for some new voices to come in that have been overshadowed by some of the other developments over the past couple of months.
And this guy is special. I don't know anything about his politics. I'll be honest, I haven't followed it. I leave it to Anne Marie Horton and Joe Matthew, balance of power. But Governor Burgum is a name from my youth. And you talk about this hysteria over Nvidia right now. There was a somewhat equal hysteria over Great Plains software. And this is the guy, folks, who said, you don't have to be in Boston. You don't have to be in San Francisco. We can get this done from the Great Plains. And this was a huge, he made more money than God. I mean, he's got to be like Youngkin of Virginia, where, he can literally write the ticket himself. But maybe he can loan some money out to some of the others. But the bottom line is Doug Burgum is what everybody in this country is dreaming of. Steve Case, AOL, leading the way on this, doing innovation and technology outside of 4 zip codes in California.
I lived in Fargo, North Dakota. They've got a big Microsoft campus at the time, and that was part of the push. He did have to gin up some of his own pocketbook, though, to get people to donate enough so that he could actually be on the ticket, because he doesn't necessarily have that common name appeal. It's, that said, he does represent another time and place in this whole race.
Yeah, and so we'll see that. We'll have continuing coverage of that, of course, Anne-Marie Horton and Joe Matthew tonight on Balance of Power with that. An incredible day. We're on our way to the airports here in about 60 minutes to get out to Jackson Hole. Lisa, what are you going to look for at Jackson Hole?
Just whether they do talk about the new neutral and whether they actually feel confident that a soft landing is not a pipe dream, that this is actually a base case in a real way,
right,
which a lot of people are raising eyebrows
for. My mother, chip beef on toast, the Pioneer Grill.
You're going to eat it for your mother?
I'm going to have it 2-3 times. Only reason I'm going.
Miss Keene, this is for you.